Oh.
Data 1 minute tag, get ready.
total jobs opening 9.2 to 9.25. It's about 1 minute, and that should move the bond and market. So again, we're right at VWAP to the high. That could change everything. So the high number is bad, the low number is good. Right to 1.4. I forgot about that. That was running on the juice. It came down a little bit. 30 seconds. One pounding. Wait for it. Wait for it. I'm just trying to take it easy. I'm going to the other side. We get 9.2 and 9.25. Last number was an increase. 1. And we're off. I think it's our highest number. I think the highest number is 9.5. Oh. It fucking revived last month. Last month though. So last month was a huge shoot. They revised it down by like $1 million, I think, or what, 9.6 or 9.8. So they revised the job opening down last time. I think that's what's giving you the response. And then it was a slight dip. Again, job opening meeting, I think, like what, 200,000 a month? 9.53, 9.25. Highest manufacturing payment. So I think that's another thing that the market's like, but for the most part, the bonds are not getting killed off of it. But I think the revisions are helping you out. So even though Jolt's jobs openings missed, I think a small revision, because remember, last Jolt's jobs opening, we went down because we were freaked out on how big it was, because the last time it dropped. So now you revise that number down by a fucking million almost. I mean, that's a long way. So it's like, and now it looks like month over month. You get it, right? Now you get the chart. Month over month job openings only increased by 100,000. That's the way I'm kind of looking at it. You know, whereas again it was 8 to shooting up, it shot up like almost $1 million, and then it came down. But now it's like, you know, month over month, it's not really that big. Or ISM, I don't know if I would ride on it fully, but for the most part, the markets are like the data is still going up. But again, the revisions on me. But problem or blessing, depending on how you look at it. Just like you're saying, I just think the market is taking that stride. Yeah, 10-year flush a little harder after that. This could be good, man. It's not looking down, but we'll see if the rates actually stay here. But you got a little bit extra of a flush, so maybe it stays below. But for the meantime, that to actually hold now, and then that'll start taking up the towel now. This revision thing again, like I told you, in like 08, the revisions were very common. But just unfortunately, a lot of our data here is, I was bringing this up yesterday, you have to kind of come to the reality that a lot of the data is disconnected from the market. And that's sad for somebody who loves macro, as I love it myself, but generally speaking, I mean, what I'm saying isn't that crazy. This is why we freaked out the last earnings season. Why? Because quarterly earnings were showing something a lot different than economic data. GDP was hitting records, and you have more companies missed than in the last 12 months than this last 3 months. So stuff like that, there's a real big disconnect in that data. So it's like the revisions, all of that. I mean, it's market reaction, but there is, you got to be mindful. So it's like, maybe you can trade with it, but as far as like analyzing the economy, I don't know if we really know the amount of job openings. I could read it on the website too. You can go read through it and see, how many of it was government jobs, and that could change a lot of things as well. So that's what I'm looking to. But I think revisions saved us, because I feel like without a large revision, I don't know if that number would have been received well. And then also at the same time, PMI got weaker. So The bond's still holding, but equities, again, they get a little bit higher, and they're kind of slowing down here. 42.12. We're at chapter 11. PT, Caterpillar, PTX on the high. Stocks up, bonds down, and all that. Dollar 10, yeah, it's still up a quarter, it's still up above 30. I've heard that too. I can't say I haven't, but a high Justin Bieber or somebody. No. TikTok. Rebrand anything nowadays. That's what like. You never know. Maybe they come back. Maybe they do what Crocs do. Maybe they start putting holes in the makeup on them. They make something weird. And like, oh yeah, that's cool. You never know. So again, a lot of companies that's usually having a OG thing like that. Realize how shitty this last 3 months was. The market is like arrived perfectly at a pivot point the day of Jerome Powell. Oh man, hyped to wake. I was so hyped to wake up this morning. I woke up, I took my dump, everything. I was like, oh man, there's a refunding holiday stuff. There's a lot. You gotta wake up and drive, man. And what we're dealing with today, there's a lot to get in for today. A little lower. Back down to B1. Like I said, bonds are holding up. Markets not so much. Interesting little data reaction. Been a couple of minutes for now. IMF staff attacked with Somalia on 36-month credit line. Mass lawsuit against Apple over iPhone batteries can go ahead. London tribunal rules. Apple getting sued. I don't know if that's giving effect though. Watch out, watch Apple. Again, something about them getting sued. Or court case being allowed. On the high, that's over where it's got bonds still going up. I want to see maybe the dollar keeps going down, but the dollar is damn Frankenstein. And gold too. Gold is doing that little baby climb there, another 0.25%. It's still mad early. We got what? 2 hours still, 2.5 hours till Euro close. So it's again, it could be a weird one. We are moving a little bit better than the other day. So if you guys remember, the last couple of days we haven't been moving till Euro close. So I mean, so far now, we like those 12 points, bottom to top, a little bit maybe of gap up. 42.05. SRPT, that was maybe down 40. They're coming up. LMP bonds, 30-year hitting 2 lines. Okay, or close to it. I swear I just saw LMP on the high. I don't know if it's loaded. I think LMP's at 455. Yeah. I think going Quest Diagnostics, they're at the high right now. Looks like they're getting volume recently. I don't know if there's news, but that's to the high, 1.3%. Iraq's oil exports average 3 million barrels a day in October. The senior 10-year yield curve flattens further after U.S. data. Israel is moving with 4 more soldiers in Gaza. whole morning, I swear I'll be talking to you. If not, I'll get a check out or something. But, like, I don't know if it's possible for you to like the video in this circumstance, but it's possible. I wonder what would happen if I took Prozac. Like, would it do the opposite, or would I be more like excited? I don't know. I used to think Prozac jumped when I first discovered what it was. But I really got that part. LRN. I don't know if the chat was posted that earlier. Up 1.1. High Kicker has a little bit more activity. Let me give you a breakdown now. Now that we've gone through the data. So, Dow Jones right now, you have 14 names red, 16 green. So Dow Jones practically NASDAQ 1. Man, this data is crazy. NASDAQ 100, 52 red, 49 in the green. Sure enough. S&P 500, 250 red, 240 green. Y'all get it? Not only are you at 4,200, not only is it Powell, you're at the pivot point. Right now, about like what, an hour or so into this, you have everything 50-50. So literally half the indexes from the Dow, NASDAQ, SPY, half the names are green, half the names are red. So you got 50-50, I mean 50-50 coming into all of it. With bonds up and then equities again barely up here. That's why I think the equal weight stuff kind of weird, but you have the what's it called? The tech factor here. House speaks at 2:30 p.m. Eastern. So maybe do me a favor. Since I love answering your questions, you can like the video, I'd appreciate it. Scrolling up to like the video, you know, you bring this page down for me, you will see the like button and you will see Jerome Powell live at 2:30 p.m. Eastern, as well as the title of it being the FOMC Live. So all I ask is one like on the video, you know, and that way it works out for both of us. It works out for both of us. Statement at 2, Powell at 2:30. As always, never changes. That's the beautiful part. Same schedule. We talked about it yesterday. I hope you were here in the morning. If you heard, everybody thinks it's going to be a nothing, but this was just kind of weird because I think it's kind of surprising, just with everything considered. But a lot of people are really just saying Powell, he's going to defend optionality, he's going to defend raising, having the ability to raise rates again, and then that's it. But I agree with that. However, I do believe that it is how he discusses long-term rates tightening financial conditions. I do believe that will be the most important part. That's what I'm going to be listening for, and then I additionally think Powell is going to be read as hawkish. So what, like literally right when the statement comes out, and then right when he talks, I think the market is going to take what he's saying as very hawkish because I think everybody fell behind on what has happened this last quarter. So I think now we're focused on the market going down, and we're like, wow, it's so bad. Maybe Powell is going to focus on this. Like, no, I don't think Powell is going to open up with what we think he's going to open up with. I think Powell is going to open up with the hawkish pause type. You guys remember the hawkish pause? You guys remember that one time we had the 10 minutes after the hawkish pause and everybody was like, oh shit. And they got kind of caught off guard. I think that's going to happen here today, where we get a little bit of hawkish reaction initially. And I think everyone's it's going to be the same speed, but everyone's going to be like, oh shit, he's really like, damn, pretty crazy. Just because Powell's backdrop over the last 3 months, every single data set going up, oil going 60 to 90. I keep thinking it's going to be shocking at first, and then I think markets is going to digest it, and if he talks favorably about longer rates tightening up, market's going to like that. But at the same time, I said it, there is a black swan scenario there that even though, and again, this is where you know I'm very different, Bloomberg, CNBC, everywhere else right now, Financial Times, they're all saying it's going to be nothing. They are all saying it's going to be nothing. Although I can get behind that to a degree, I think initially hawkish, I do believe there is one black swan scenario that does exist for today. I'd like to know what it is. Hit that like button. It's 5 going up. No, it's not that he raises 25. No. Not even like, again, like I'm telling you, long-term interest rates are the key to today's move. If he, however he discusses financial conditions in relation to longer-term rates and like how much has happened, that is going to be the utmost important. Fine. So where does the black swan emerge with that being the most important? I'll tell you. Not production is not bad, but simply in Powell, we've seen long-term rates tighten, but acting on longer-term rates to affect financial conditions more. That's it. We're dead. We'll be at 3,900 by middle of November. Maybe tomorrow, if that makes any sense. So you get what I'm saying? That's what very hawkish thinking. If he goes on to discuss how long-term rates, if he supports it and wants to see them come up higher to tighten more, and he gets behind the rates hurting the market, then you're going to have a really big problem. Well, it's not about higher for longer. That's what I'm saying. He can say higher for longer. He can communicate that he's down to raise rates. He can do a lot of things. But if he green lights long rates tightening financial, tightening up financial conditions, then we're going to have a problem. That would be a phrase that would be like a Jacksonville phrase. That would be a phrase that you're going to look back at and be like, oh shit. I don't think it's a possibility or a high probability, but like I'm saying, it's a two-way sword or a two-way street with financial conditions and long-term rates, because it can be really good if he communicates it positively, but at the same time, if he communicates that he wants more progress on long-term rates to tighten financial conditions, that will not be received well. Some members have communicated it. For the most part, the last time though, Powell communicated that he was pleased with what long-term rates were doing. He said he was pleased with it, and he used that as a reason to not raising rates. So you see how it can be a good thing. So Powell comes on today, and this is what I think he's going to do. I really do believe he's going to talk good about long-term rates tightening up. He's going to say tighten financial conditions, and that gives us room to pause. Even though we'll still raise if we have to, that helps us remain, in a good position as we wait and see. But if he says, oh no, something's wrong, and we don't actually need more of that, then you got a problem. Let me give you like 3 tinfoil grants today. Okay? Other than that, it's okay. Believe me, baby, let's go. ESP. We're going 4 spots, still near the high. Is waiting for the great height cycle, is potential cuts. Why do you think real estate has moved? Fuck the real estate stocks. Honestly, again, builders, they collapse and rose before everybody else. That's just the nature of their business and how they deserve profits. But at the end of the day, real estate, just wait till job losses come up. Some people, again, I don't know if you guys are aware, but some people are under the impression that the next 3 to 4 job losses, or even coming into next year, are going to deteriorate deteriorate rapidly. So if that does happen, then real estate will start to go down. But if not, it's the jobs. You got this super simple I mean, jobs have kept so many industries and assets stable, whether you realize it or not. Tesla on the low, no low. SPY's trying to work its way up still. J on the high, Gill, that's more healthcare names. I'll be able to put it up, you know why? Because I brought it up to you yesterday on the what's it called, on the watch list here. But remember, it's like May and June of 2022. That's when you started discussing financial conditions. You guys remember that? Ain't nobody brought up FCI up until May or June of 2022. Why? Because that's when we started the financial technique, and that was the first thing that moved everybody out. Every single thing he has a balance in absolute. You know what I'm saying? So even if he supports soft landing, he also, or he doesn't support soft landing, he's going to support that recession in his base case. He gets one or the other. So one's good, one's bad. That's where I think a lot of people think Powell's going to do nothing today, and I agree with that because he is going to, you know what I'm saying? Like he is going to play both sides. The real thing, like I'm saying, I think people will be shocked initially, but then we're going to go looking for something new. The real new is development and reward Israel, as well as what's going on long-term interest rates. Everything else is old, and everything that's old is that oil inflation is coming back up. So that's our difficulty coming in here, and that's where I think we might get caught off guard, but after that, it's still, it's too crazy until provide low or each note you can by discussing financial conditions relative to longer-term rates. So that's simple, complex, but not really, and you don't have to forecast too much. It's not like I'm saying this is going to happen, that's going to happen, but it's more so, you know, we got a range of what could possibly occur. And it's going to be about responding, but, you know, we'll know if we see it. If it's really bad, you'll know. If it's good, I do think you're going to know as well, too, and then that way, hopefully we get November started off a little sooner. Holy meta, 305. I even checked what's too, they're going up to 418, slide, and new high now, 0.6. You're moving up more than yesterday. So remember like yesterday we were making that move, and I was like, wow, it feels so sweet. But we were up like 0.6 here. So it's only been like 30 minutes, maybe a little longer, but you're back to the 42.20 now. You broke the 42.17. That was the other level I told you guys about. So 42.25, and then 42.31 to 20. Regulators ban use of personal data for personal behavioral advertising. So again, this is moving fast now. You're getting a little squeezy. On bottom, that's bottom 140 to 3995. And left banking and then Netflix will skip some ads if you can watch. Never heard of that. Ad. Ad. Now, market is up 3.2% in 3 days. Yeah, dropped that much in 3 days. You know what I'm saying? Like, you know, we literally did that down in 3 days. So now, 3 days down, 3 days up, you're right at the same spot. That's the craziest thing. So we did that exactly on the way down in 3 days. It is getting a little squeezy here, but don't forget Powell. So far, we've brushed off every data. Even if it was borderline, again, we've just been running through it now, and then we're setting up here into the final Powell. So 4224, you are feeling a little bit better. Like, you broke every level. So compared to yesterday, most other levels, you would be like very slow. You ripped through 3 levels today. Now you're at 4225. So this is one more level here. Get past here, then 4232, 4233, then 4247, and then you can start really working your way up, you know, as high as 4300 if all of this really does squeeze. But I'd watch those levels as support and resistance. All the levels today, even the ones I just told you, the ones that are way down. It's getting interesting, yeah. I mean, setting us up to your own, no matter what. You know, we're barely above the 4200, but you know, this pivot line. I mean, this is where all the action should happen. So we'll see it. Don't forget, you have the biggest event today, and then you have Apple and non-park, you know, the one month after that. Pre-markets, but there's a lot of shitty earnings in the morning. I'm telling you, if you were here in the morning when I was reading that list, bro, it was like down 9% earnings, 9% earnings, 10% earnings, 19% earnings, 8% down on earnings. There was a lot of like, again, there's at least 3 big names, Estee Lauder, Paycom, and one more, but both of those things lost, you know, literally 30 to 18% off of one report. And then there was a lot of sympathies related to it. Treasury yields declined 15 basis points in 1 day. That's amazing. So that's big. I don't know if are we past? Yeah, you're at Bill Ackman high almost. So that will be the real decider here on following Powell. So remember, Bill Ackman covers the rally. Woo! Then we sell it all out. I know, oh my God. Then you dump for 3 days, but now you're getting back up. And then you don't forget the last time you had a real sizable rally, you don't even show up on the chart anymore. Last sizable rally you had, bro, you vomited that up so quick. Supplies holding up these today. Again, we got back to a lot of different levels. Realistically, we're months away from the long way to no financial black swan emergency stuff. Yes. But that's why, like, you have to see the, not the fallacy, but the weakness of it. That's why Powell is effectively confusing everybody. The markets are effectively punching every mother effer in the face right now, making me really, you know, doubt which way you want to go. Yeah, they were even talking about this on Twitter. They were saying, literally, there's a fund manager this morning who's saying, hey, these values are cheap, but like looking at the sentiment, how everybody's just getting crushed, because right when you think it's cheap, you buy things cheaper, it's messing with a lot. Paradox is you don't know when it comes to happen. You don't know where the economy is abruptly going to slow down. You don't know if China's going to have that. But yes, you're right. That's why I tell people to be careful about it, and you got to wait till it's right in front of us, because when it's all said and done, it should be months. You know, we could go another year if nothing negative materializes. The economy does not slow down because of the high interest rates. There is no black swan. There's nothing to go another year of the economy being better than expected, and then inflation, you know, popping up here and there, and then, you know, do exactly what we did this year. That's benefited from plastic. If you really think about it, it's kind of wrong. Breaking 40 different colleges and pastors in Israel, directing the Israel Ministry of Foreign Affairs not to return its ambassador who left Jordan. NASDAQ climbs 1% now. That was a little earlier on those other channels. Came back down. Schumer House plan to cut IRS as part of Israel aid is dead. Schumer says White House deal continues to waste time on new bills. Schumer's not the dude who died, right? Who's the other guy? Is that McConnell? I don't know how McConnell's actually died. Food inventory, 773. Estimate was 1.8. Black oil, again, oil is already up. U.S. Cushing inventories, actual 272 versus 213,000 previous. And then gasoline inventories rise 65,000. Estimate withdraw of 133,000. Even Netflix too, that can keep going. Microsoft as well. XLE starting to run on that, so watch energy. Yeah, Meta's up 2 now. Remember, Meta had the, I don't want to say the best earnings, but for a name that dropped like 7%, Meta had good earnings. Remember that. So remember Meta, they had their earnings and they had that little dump, but they're holding up because of the, it looks like they moved a lot, but this was the day before their earnings, I think. They just had that weird little gap. Breaking down, I think we'll see. I know Netflix, I'm waiting for that thing to break out, and that can make its way up. We will be good. Oh, CRISPR? That was an AdCom. Like to a vote. Tesla's at the low actually, so again a couple of those big techs went up, a couple are going down now. My ticker is still gassing. AMD through the high, unfortunately SPX is getting the red off of that. And then bonds started coming down after hitting another high. And business once again, a mole. I mean, it's weird, bro. First, I'll start off with this before I sidetrack. Crypto is one of the best assets in the world. It's unreal, honestly. Like even the fact that crypto is wicked to me how much money is sloshing around. Bitcoin's at 35,000, but it's not like it's so weird. You're not even getting the same like fundraising hype and all of that. But I don't think things are weird. I've been that for a while. And let me show you. You'll know the truth, and unfortunately, this highlights my problem with crypto. Unfortunately, right now, ready? Who do you think that is? No. Who do you think? Shut up. No. Who do you think this is? I thought it was Tyler Durden. Yes, exactly. Thank you, somebody. I thought this was fucking Brad Pitt. I'm letting this process. I don't know. This guy, the court sketch, is saying this is Sam Bankman-Fried. This guy is the same as this guy. Let me show you one more time. Market's still at a high, but this guy. No, hold on. Don't blink. You stay focused. This guy with the cucumber is this guy. I need to see the sketch for Caroline to really see how far they're taking it. Tesla's flushing. Oh, whoa. Tesla, that's all that's printing on the low ticker. 200 break. Tesla's going down. Buy still holding up. We're watching a little bit of move there, but literally they're going down. Like I'm saying, if that was the real sketch, I'm not touching crypto with a 20-foot pole. That's how the quarters and everything. That's what I'm saying. I'm like, no way. This stuff getting way too deep, bro. It's getting way too deep. That's my thought, like I'm saying. If that is the real photo, if that's how they choose to represent him, everything I'm saying is still true. And I'm like, this is too sketchy. That's all. Like, just the sign of the time. It's just, I'm like, it's way too sketchy. If they're really trying to, like, get away with that, like, that's how he looks. No, it's not, bro. It's okay. No news on Tesla again. You got that little flush there. A lot of people talking about scooping it up at 200.
Short squeeze. Oh, short squeeze.
Delay my deposit. Not on all of them, but I still, if I'm going to get access, I think it's like, they call it 10 business days now, to the big account, unfortunately. And also, too, you can't even log into TV Swap until the 4th, unfortunately. Earnings preview, yeah, we'll do that later in the day. Probably after Powell, or maybe ahead of Powell. We'll do the PayPal earnings, SPY hitting another high. Am I buying Bill with the money? Maybe, but there's a couple of names I want. And again, I mean, it just depends on the market. I do want names because, you know, if we do get any relief on some of those defensive. I mean, I still believe in it. I mean, there's a lot of names that we were talking about earlier. There were names that were very, very valuable, or they have a lot of value, and you think they're cheap, and then they keep going lower. And then it's just like, then it starts to come back up. So it's just, I'm waiting for the time they go up, and I do believe in the value of some of these names. Will they be the best plays for the next 12 months? Maybe not, but in the next 5 years, I don't think I'm going to get that. Speaking of some of these slides going up. That's more like it. That's that last one. That Caroline is getting kind of wild, bro. What the hell? Wild. Peak 9.1 rate. That's Sam Bankman. That's Caroline. September 3.7. 2% target, man. And look at that. Even Caroline looked good right there, bro. Hey, bro, that went from, that's crazy, actually. I'm like, I didn't even think you could make Caroline look like that. Very impressive AI. Tesla's still on the low, no news. Matthew on the low as well. Like he would die. Yeah, but like I'm not really too worried on that one. Like dude dies until it doesn't. So again, the violence on the rig will be there, but we just got clapped on the again, the whole China play, but it can die more. That's the big worry is if it really goes down, unfortunately. But I'm still waiting again. It's either we average above 100 or below. So I'm waiting until we at least get something moving in our favor. Right now, the momentum's going way against us. EPS is putting it on earnings. SPY still working its way up. Yeah. We're feeling now like what, 2 months. Feeling less than 1% on that Netflix position. Live report already affected the last year. I think it's fake. Again, that would be the thing. Saying if that's real, then I'm not buying crypto for the traffic. It's clearly there's something going on in that weird world. They won't tell us. It's the low. 30 on the European bottom game. Right? 30 is a very wild bottom, but I don't know if that would really be the best thing for it. We're going to find out about rate hikes today. I mean, quite frankly, you don't need to, like, if you're worried about what's going to happen with rates, you already know. It's priced in. He is going to pause. He's not going to raise rates. Virtual certainty at this point. So that's kind of ironic considering last Fed meeting we were freaking out about November, but for the most part, he's going to pause rates today. The real question is, what does he say during his press conference? What does he feel about longer-term, rates and how they affect financial conditions? And that will be the meat of the bone rather than SPY, bonds, holding. I mean, it's nice for now. The only problem is the dollar like yesterday. But again, yesterday we closed up green and now we're still green, even though the dollar was up. So 14.25, that was the other level I've been giving you here. So again, next level is going to be the top end, 4233. We get above that, and then we're going to start looking at 1446. Otherwise, we still got all these, again, 1417, 1420, 1409, all that on the way down, and then 4200. But as of now, this little melt has been working. SPY up 3/4, Dow 0.5%, NASDAQ 0.9, Russell 0.18. I don't understand why you wouldn't raise rates. The economy is being hot. It's because long-term rates are finally going up. So, and then remember, there's long variable lags. So, you kind of play the wait and see, but at the same time, you don't want to over-tighten and cause problems. Because you see it, right? When long-term rates went up, financial conditions tightened. So, if he raises again, and it tightens that fast, there's still a delay, how it could run the risk of just totally collapsing. Didn't collapse, that would bring in some fear. So, for the most part, that would maybe 18 months, 16 months of rate hikes. Finally, are back-to-back rate hikes. When I said this a while ago, if you guys remember the watching room, I told you once he actually pauses, that will be the evidence of the pause. Not only did they not raise last time, this is now going to be 2 times in a row on history when you look at the chart. Nothing happened. Now, I sold out of RTX literally 2 days too early. I got like $1,300, but I left another 400 or 600 on the table. Owl at 2 o'clock Eastern, and then the press conference at 2:30. So the FOMC at 2 and 2:30. Owl. If they raise, they're going to die. And it would be an unexpected event. That's never not. So right now, it's a virtual certainty how it's not raise. If it does it today, they're going to be at 39 real quick. But that, they don't have to worry about it. That could not happen. And that's why most people are thinking this is going to be a non-event. I think it'll be a little shocking in the beginning, but other than that, I mean, you can't do that. So 4-2-3-3 again, 4-2-3-3, 4-2-3-2. That's the next level. You're working your way up. This is way more squeezy than yesterday. Again, we haven't even had Euro close, bro. That's the crazy part. You're just rocketing up again every 30 minutes, every hour at a time. You are literally hitting a new high. So it's way, way better than the last couple of days. This is their first semblance of a squeeze, and the only part that sucks that's happening on a day when people literally upend everything in one statement, ironically enough. Breaking technical, I think it's getting, I mean, it's going through every level. I don't know how to scale the book. I don't know if you do a line here. I don't know if that breaks it out of any line. I haven't looked at this full time down, so maybe driving it out. Bonds are slowing down though. So again, stocks are moving more. There's Netflix on the high. Dollar's negative now. No shit. Hey, hold on. That's actually, I'm telling you, the dollar's the problem child, but this is actually good. You may top out, even though it started by hitting a new high. I mean, if you can start moving a little lower on the dollar, if you give up yesterday's gains too, if you can close below, if you get to 29.81, I'll love it, but if you can start creeping into yesterday's from the dollar started to look a little better here. Again, it's gone straight down. The dollar's up by 0.3 at one point. I have to wait, unfortunately. So I don't really have a choice. Again, my swap account, it doesn't get active until the 4th, and then my other e-trade, then I move the other account too. I'm still waiting on that, so I won't have access to it until after. So there will be at least a week delay, I think, on any long-term purchases. And then by then, I mean, everything already breaks. I'll be fine putting the bill, but things are still cheap that I'd like to come down by. Correlation between the dollar and the stock market. I mean, I can give you the simple one. If you try to look into it, it's going to confuse the shit out of you because it's much more complex than that. But at surface level, dollar cheaper, prices up. Dollar strong, prices down. A good example is Japan. Every time Japan's currency weakens, their stock market breaks. Why? Because although the yen is easily converting them, the Japanese are getting rich off of investing in these now and cost more to get the same stock. So, that's the simplest way you can look at it, but it is more complex than that. There's way more factors, and in different times and what we're going through now, the relationship between the dollar and equity is quite finicky, but in a broad sense that is prone to error, higher dollar, cheaper prices, lower dollar, higher prices, lower dollar, higher stocks, higher dollar, lower stocks. I don't own any treasury yield stocks. No, I have a 30-year bond base here, but it's not like I'm involved with it. If anything, I'm older than again, like we have 30-year bond. Yeah, guilty up on a lot of things to bring funding, because the data, the way to not disappoint me, what a poster and it's exactly what it last time. You never got any messages. Tell you That's why, like, I was trying to do it now. I mean, they move my one account, it's still in the process, but they can move your whole thing. So if you don't move it, they close it. So they sell out your options, they sell out your stock. You'll have to take the taxable gain or loss, whatever it is, and then they will just mail you a check from the amount. Coming down here finally, keeping the bars. That was a nice little amount of squeezing there. 750, we got an hour and a half. He told me to be a year so you can ask. Oh wow. No way. Sweet. My internet is good. It should be. We have one issue today, but I have it and now I have like I have people on live on two separate networks. So usually if one goes down, you see them immediately go to the next one. That was my problem the other day, where both of my networks got flattened out, and then one of them wasn't hardwired in, so I had to get that on it. But we'll see. I don't know. I mean, I don't know if I can change anything else, but I have 2 gigabytes. Again, 2 gigabytes up, 2 gigabytes down on both. I think it was, but like one of the things the guy showed me that fucked up yesterday. That was so funny. Dude, I'm talking to this guy. He comes early. He's supposed to be here at 1, and then like he's just telling me what he needs to do. So I'm like, let me just go check outside real quick. And I'm like, all right, man. I was just like, please don't cut the internet though. I was like, I'm working right now. I have some stuff that I need to do. So I was like, if you are gonna cut it, let me know. Don't cut the internet right now, right? Like, yeah, of course, shakes my hand. Walks outside, bro. I come back in on my desk, and then he fucking cuts the internet. And I'm like, oh my fucking god, dude. I'm like, dude, this is crazy. And I'm like, and then I got so mad, bro. I was about to go off on him. And then I was like, hey, calm down. I mean, I miss his dad, but I'm like, and then I had to go out there and talk to him. And I spent an hour following him around. Cut it down to like 30, 45 minutes. I was using my phone to send this guy. Questions and why you cut it. I was trying to like lead into it because I like stood out and I was like, well, I don't have anything to do now. So what's going on? But then he started complaining. He upped me more complaining. And then I was like, okay, fuck it. He got everything done though. I literally I was like, yo, can you just not? I was like, if you need to cut the internet, come and tell me. I was like, don't cut it. And then he just walks outside and cuts it. It's like, what is it? You never had that where you like communicating something, like really clear to somebody? And then you're like, yeah, for sure. And then they just do the exact opposite, like right away. It had an element of humor. Because I was like, there's no way that's exactly what you just did. He's like, yeah, sure, get it straight up. And AMD up, again, Netflix still going. Maybe the video, high kickers all over the place, but bonds are down and equities are going up, down a little bit at a time right now. Satellite internet is slower, so you can't get it fast no more. Well, thank you, man. Thank you, Oscar. Shout out baby Oscar. That's not stick shift, is it? Comfort, that's why. I don't know about this one. I'd have to look into it. A lot of people lately have been bringing up some names. It looks good on the chart. It looks like an outperformer. I would be mindful of the premium, but comfort system USA. Where it's 2% or high. Yes. You know, how they were set up. Again, I would have the ability to hardwire one. Now after this, they have a little hardwire. They were getting reports and everything. It was weird. I never had both things go down on the wire in my house. Not that stuff or something. AMD still again, this is coming out in the Netflix 420. Time is left. I mean, you don't have any events for another, what, 2 hours? No, 3 hours? 3 hours till the release, 3.5 hours till Valve. Then you got another hour and a half till your own close. I saw it, I was gonna do it, and I was like, cut off. No. So I gotta play though, I'm just gonna get like 1 or 2 games in that I have the time for the rest, and that's it. I'm like, I feel like if I didn't have any of the clothing, I'm like, I can go watch Lord of the Gold again. that's the only thing I'm pretty surprised, honestly. They has the most relief out of any of the other ones, just such with Powell. I think XLP was down 4 hours, the only thing that maybe XLF actually came up, no way. Maybe it's the same, so they're right at the cusp, watching those slip. Our favorite MLB stadium is Petco Park. I'm going to play Petco Park. No, I've been to Dodger Stadium. I've been to a couple, but literally Petco Park is so good. I love it. Like, if you live in San Diego and you haven't gone to a Padres game, like, you're missing out. It's a vibe. It's a vibe. That's a good vibe. I don't even like baseball like that. Google in November 23 did Google add gambling and game policy United States country specific was updated. Yeah, AMD is insane, bro. I wanted to make a play on it. We were talking every time I want to play earnings, I'm like, alright, wait a little bit. They already went down, and then it just fucking rockets every single time. So your day of earnings move is always negative, and the day like literally right after it goes nuts. I didn't go into the park. I was walking around there by the Embarcadero. Last time it wasn't too bad, but it was pretty like, you know, there was a lot of homeless. I didn't watch anybody get robbed, but besides that, I mean, it wasn't too bad. If someone would make San Francisco, I could say that. Padres games at Qualcomm. Yeah, the location of Qualcomm is better than the stadium. Those are Blue Force, La Perla, Blue 3, taking it, shuttered over Taxman. Or, I mean, lingerie, lingerie. How do you go to bathroom? Well, you know, Instagram, Happy Trading Fraternity, kind of started to turn up here, but so far, a little bit of a squeeze for me. You know, we are still waiting for Powell. Follow me on Instagram, Happy Trading Fraternity. And I'll be right back.
At 8:30, a new funding announcement hit another jump higher, and then you get the weaker ISM, and then you're on the highs of the session, which is 2, the 10-year yield. 30 years getting all the headlines there, down 2 basis points, but this is still down 13 basis points. The data is seeing more on the front end, and takes some of the stress away from the long end. Also, a weaker ISM, maybe the Fed is justified in being kind of done, and it's on hold. All that can relate to the market. Dollar net note, a little bit of idiosyncratic. We saw the DOJ come in trying to defend that 1% level for 10-year JGBs, so they're kind of trying to put their money where their mouth is when it comes to intervention. However, 151, I don't know. I feel like if I was in that 6 months ago, we'd all be freaking out this one day.
Yeah, it's interesting. Maybe we will at some point, but we definitely have to wait on very quickly at some point, but it's not yet. What can I expect about the issue you were raising about what's happening in the bond market right now? A question that I raised today. So, which is the most important factor? Is it the Treasury Janet Yellen or is it the Fed Jay Powell? I guess you got to pick your spots on this one. But I think this chart behind me does kind of tell an interesting narrative, and I would urge you to really build up his opinion on the Bloomberg today. This is the US curve. Back in the summer, it is the blue line looks very inverted curve. The front ends come up, the 20-year rates, that's really controlled. But the longer end, the duration story is still kind of firmly anchored around 4. So then you get these big moves between there and there. The front end doesn't move very much, and the long end comes up really strongly. And this kind of goes to the idea that maybe it's the issuance story that really is driving the narrative in terms of what the biggest story is out of the bond market. But build up this piece of that big registration question. Is that move higher term premium as maybe the Fed would like it to be? Or is it actually upstart, which is going to require longer rates longer? Is it maybe the market not believing as well that interest rates, have done enough and inflation has been beaten and maybe rates do have to stay higher longer? I think that's an open question at this point. But in terms of where the action is being, you can clearly see that it has been that big move at the long end that is dominated. Today's story is at the front end. There I think the battle is more even Stevens between the Fed and the Treasury. Isolated that. The long game chilled out. Or then nobody did that's why you got 2 years history right now. It's very, I think it's sort of very simple with this long end, 10 years history. That's the story. block is running. That's good. They were down earlier. Yeah, blockage came back up. They're red to green. PayPal, I think they're still red. No, they're green. By 0.3. Netflix is holding up there. Meta was rocketing. Again, Meta back to 306. Google near the high. Amazon and Apple too. Apple not really running into the high of their earnings coming up. Oh, I got the team. Oh my gosh. CBS rated green. Yeah, almost actually. So a lot of things, even the equal wave was smashed in the morning, but it seemed like tech was the first one to get the bid, and then everything came back come up there. Gas and some of the projects are raising gas, able to sold back to the sometimes that. I don't know what you know. It gave me a lot of good memories. That was a good start. Double shot. No, already know. Spirit Hero says boosting the cash flow is top priority. Powell. Well, actually, most people think he's not going to say much. So now that all of the data so far today, I mean, it makes sense why we got a little bit of lift boost to say it'll stay up by the time it comes on. But for the most part, you know, that data in the morning, we kind of, we skirted a lot of bullets there, dodged a lot of them, and found a way to go up off of everything from the, what's it called, from the bond refunding to the ISM to the jobs opening, all of that, literally, you know, 15 basis points on the 30-year, 15 basis points on the 10-year, that's big. When we saw those on the reverse, we were panicking, so it was a nice little relief on that front, but for the most part, a little cushion into Powell. I think we should be right at 4,200 by the time he talks. And again, that's what I was saying the last couple of days leading into it. So we're a little above it now, got a little bit of relief, but we do have a couple of hours to leave here from today. Right, you know, on gaming before stocks, shortly after, you know, the stocks came about my life. So that's what's wrong. I'm killing it too, and I just got old and I can't play sports anymore. That's just a sports game. I can still play sports, I don't know why. I don't want to hurt my knee. Well, no, you mean like gaming stocks? You mean for like stocks that revolve around gaming. So, you know, we talked about Activision the other day. I do think Grand Theft Auto 6, that release, the stock hiked up a little bit. I also think Take-Two, or not Take-Two, not Activision, but Take-Two, bro. Oh my God, I think they are literally, I think they are spending, so many people are spending money on these. It's great. I think they're going to do good on it when it's $7.95. What's your name? What's your name? Right now, people.com. Again, I remember you saying that everybody gets contacted in 24 hours. So, send me your name right now or email me for the people.com. Shouldn't be this long. Tell me when you send it to me. Right there, right there. All your puts today? It depends, but as of now, I mean, again, I think we're going to get a little bit of bearishness to start, and then a little bit more of a savings, so that's to I haven't talked about it. I'll do that here in a second. other one I'm looking at that stuff, but if you're from the UK, your number is not United States, it won't work. So that could be an easy answer. Other than that, though, you need like a number to get it set up. And you are coming down a little bit. Again, Vaughn did this last time, and then we worked our way up. And unfortunately, I mean, we still got an hour and 20 minutes. Hour and 20 minutes till you're above. Honestly, you know, the house isn't that bad. Oh, that's that sucks. Like I showed with all the other houses, is that it's harder to sell when it's time to sell. It's harder to sell the small. But I'm trying to keep it lower. You have one low comp in the area recently, but if you want to put in an offer, probably get it. I don't know if you want that to live. It's not bad. Again, the area, I think the price they bought, I think the people who bought it overpaid, but you get the benefit on that a little bit. So they have 4217 now, so 10 points down in 3 minutes. Remember, this was one of the first levels here. We didn't get to that 4235. That's what we're waiting for, but we got a nice little Raul there. That was 10 points. 10 points right back down at VWAP. Bonds are coming back down, and bonds are still well above, actually. Let's see. So bonds, they did not get up to the bill active level. Unfortunately, that's where the losing stopped last time. Raul is the rough day. Raul is a lot of different. Delta Airlines sales of flights from JFK to Tel Aviv to November are suspended effectively today. All remaining Delta services from Tel Aviv to Atlanta and Boston are canceled. Delta monitoring security environment. Israel informed cancellation. Flight schedules from Ben Gurion Airport to Tel Aviv. Literally more flights halted to Israel from Delta. Israel conflict is important to you. That's a really deep question, sir. I don't support any war at all for any reason. I'm not with you. I don't. I'm a hippie. I'm a weirdo. Maybe I'm not me. Maybe I'm ignoring a lot of things, but nowhere in my mind is going to see much for me work as Bible. So I'll keep my 90 minutes, but I hope principles and radical ideas change the world, especially in the state part above all else, that's my example. So I think I know violence, I think I know war. I encourage all of you, the generation that would actually want rather than the ones that encourage it. It's wicked, folks. When we were young, we would read books about history. How did World War II happen? World War I, literally things from the Holocaust all the way down. It's like the world literally massacred in the world, and it's just like, you ever wonder how that happen, like how it was allowed, it's like, how did people just sit by and watch, millions and percentages of the world population die? How did you watch that happen? I mean, I think you guys can see it now, right? It's society. It's like you have people supporting violence and justifying whether it's defense or not defense, whatever the reason may be. But you know what I'm saying? Like you're witnessing it right now. You get to experience what it feels like because same thing. We have a culture, we have a war, but unfortunately not good. I encourage all of you to fight for peace rather than destruction. I've heard this song. I've been in 3 weeks, man. Oh, the war could take a back seat. Ladies and gentlemen, Bradley Frizzle and the Peach on Power Day. Oh, no. Wow, Peach Nation, get your ass up. Bradley Frizzle and the Peach. Oh my goodness, thank you. Yes, I want to be here. That's the goal of the moment. You have to have peace time. It's great. Oof. Oh my God, thank you. I mean, can I make a funny joke without, I don't know if it's too soon. But I have a funny joke. I thought of it the other day. My joke was, I was shocked. I was just thinking about it, like, no fucking way that, like, the little TikTok generation is more supportive of war than me. It's the wildest concept. Like, who would have thought that the mother effers, like we're sick, you gotta realize that. We will go and do, like, a little TikTok dance, make this weird-ass video, like, giggling, and then turn around and then just support a massacre. It's like, that generation, they're gangsters, whether they realize it or not. Because they are deep down and just, they're like, murder, protest, kill them. Who would have thought that the little dancing generation would have been more, like, more hungry? That's just mind blowing. But then it's the old guys, the boomers tricked them into it, yeah, 100%. The boomers, they come here young and they got you to get mad about their issue, and now they got, we're going to be fighting the boomers last war. It blows my mind, bro. Like, it's a different type of life. But it is very American. It's like very detached from it. It's very just like, that's it. They will. I mean, let's just hypothetically speaking, if all of this stuff, this is why something wrong. Stop supporting violence. If this keeps going down the slippery slope that it is, and we run into another Middle Eastern conflict and wherever else from here, everybody is involved, unfortunately. I really do think so. That is a kind of part of a societal, I wouldn't call it a societal flaw, but there is just like a pervasive thing. I've seen it with the younger generation. And it's not bad, but they really are just all about the underdog. That's it. They support the underdog, and no matter what. that is a character trait, I'd say, of the current generation. Powell didn't happen yet. So you got Powell in a little bit. The only thing that happened was the bond refunding, the announcement. Yellen decided not to sell for 20 years, which was good. Bonds got a bid, and ISM came in weaker. Bonds and equity got another bid. The jobless claims came in a little hot, and everything else we were still able to get a bid, and it kind of squeezed us up here. And now we're waiting for Powell. If anything, we're waiting for European close. That's going to be an hour, not minutes, believe it or not. And then we get Jerome Powell at around 2:30 Eastern, 2 p.m. for the actual release. Schwab lays off 2,000 people at 35,000 staff. Yeah, we talked about the Druckenmiller Miller thing about Yellen. He was kind of right. I mean, it does make a lot of sense, but he did go off on their this. 425, I mean, it's on the table, but I don't want to get your hopes up too high. I mean, even right here looking really good, but now you're crashing back below the level. Maybe crashing is the right word, but it's not really showing too much respect. You're going to go all the way down. Like we said, it's a big move leading into Powell. We'll see where it does, but then again, Powell will be the set-all be-all for the day. Sunrun did good, or no, first Solar did good. They were one of the only ones, and who was the other one? Go. I went car shopping yesterday after we looked at the Lambo index and I saw that down and we looked around. Car prices are down across the board. So the cars are still expensive, but they're still it's lower. It's definitely the lowest it's been in a couple of years, but it's still high. So I found some good deals on cars, but it's still I feel like if you're financially included, it's just not worth it. There's nothing, even if you want the car, even if you're financially improving, I don't think it's appetizing, if that makes sense. So if you're about speed, are you talking about people, or are you talking about velocity in the market? Speed, but the car, but market, I don't care a lot about it today. 737 output for fourth quarter ranges from 37 to 42 per month. Spirit. 34 months out, milestone, baby. Rich Daily. The car that you flipped months ago, I still have it. I didn't flip it yet, but the value is still surprisingly. So that's the reason why I bought the car. It was just extremely rare, but that car, I mean, if anything, I see the prices go up on it. So I'm feeling on it. I drive it I take my girlfriend out to try to get her or something. Otherwise, I think I put on, I don't even know if the car has more than 300 miles on it. I barely drive it. So that one was just I got a good deal on it. With it. But I don't want to take it into the that's why I just have it at a really high price. Not told anybody actually. So it's one of my private cars. About criminal realtors telling people that they take loans and all the car sales people are doing house financing 5 later. It depends. I mean, will I realtors want of their commission. You know what I'm saying? But at the end of the day, too, sometimes like I've been in a place where I have to take a bank statement loan, and it wasn't because I couldn't afford the house. It was because of both regulations, how it was. Again, if you're starting off a new business, so there's people out there, like there's some of you guys who made money in the last couple of years, but if you didn't set up your taxes and your corporation, and you didn't do it all the right way, and have a good track record of it, you won't qualify for shit, even if you want. You know what I'm saying? So it's like sometimes it makes a lot of sense, but for vehicles, I wouldn't say. I would like if someone telling you to refinance a vehicle later, you are going to go into equity. Housing it depends. Like if someone's trying to afford it, if you can't afford it, I don't think real estate agents, none of them do this, and we don't stand by it at all. Like if that person can't qualify for a home, can't afford it, you don't tell them to go buy it. But there is reasonable instances where, again, people can genuinely afford it, but how it is for qualification. And don't forget, banks are tightening up loans right now. They don't want to give out their money if they're worried about long-term rates moving around. You got to think about it. Why does the bank want to give a mortgage right now? Guess what? They don't. Why? Because what if the rates go higher and they give you more for it? That's why they want to be very, very specific. So, unfortunately, there is some reason. But I do agree with you. There's predatory. It's both in real estate, and that's why, you got to conduct yourself better. And then cars, especially, very, very predatory. So, you just got to watch out. But don't think you're going to refinance a fucking car. Because by the time you go to refinance, we're going on O2 market. Not 2020 market. Borrower right now it's not easy to be a borrower. That's all. If you want to borrow, you better show you have money, you better put up good collateral, and then you still are going to have to pay a higher rate. So unfortunately, it's getting harder to borrow money. It shouldn't surprise you. Look at the interest rates. Again, look at what happened with bond yields, all that. This is financial industry speculating. Literally, one Jerome Powell won. Right? It's not to stop all financing, but it's making it slow down the line. At least 324 passport holders crossed to Egypt from Gaza first after evacuations, Egyptian Security Council sources and Palestinian officials. Student loans, make sure your student loans are low. So right now, like we had this talk yesterday, some people in here, they have student loans at 3 and 4%. You hit the fucking jackpot. Because all you gotta do is take your yearly payments, put it into a bond, you'll collect 5%, pay your loan off at 3, and you still pocket 2% gain on your loan amount. It's nuts if you think about it. So it's beautiful. Or the payment amount, I guess. So that would be the best case. If you are above it, and if you can refinance, your rate is like 9-10%, I would try to refinance something lower if it's possible, but then again, rates are high. Egypt is not cool with housing all the rest of it. They're down with housing some of them, but Egypt, even yesterday, people were getting mad at Egypt because Egypt was, they were saying we don't want it. They said they're willing to fight to not let any people in. Because again, the worry is you want to help people, you want to help the Palestinians that are being unfairly treated, that are being, murdered, literally. There's Palestinians that are not lost, but at the same time, you run the risk if you let a mass migration in through your border there, and then back on, there is literal terrorist groups that are around that area. They are worried that they're going to let Hamas get a presence in Egypt, so they have to fight against it. Yeah, they're only taking 4 nationals. They're fighting to not take anything. And a lot of people got mad at me for that. Alcohol within the last 48 hours.
my hot take, I don't think you're going to get a terrorist attack in the States. A lot of people are scaring me and telling me that, but I'm like, no, why would they? When Americans are supporting terrorist organizations. So, I don't think they're going to attack me here because that didn't work well here. So, we don't respond well as Americans to terrorist attacks. We pull out the FCC. We respond more to underdog social justice. You'll have everybody on your side, and if they listen or not. So that's my hot take is that although I do think that there is a risk of the southern border, at this point I don't think physical terrorist attack helps terrorist ambitions and display the social problem. Very wild trade. Very wild trade. I was shocked by that. I don't know if it's confirmed, but I did hear about that. But they're trying to bring all the All-Stars to LA, so like repeat of the 80s. Harvey's really good. I don't actually like the name from. How did you keep your decade go buy a 1-year bond that pays out a month? I don't know if the 12 months pays coupon, but or you can go buy an older bond, you can go buy somebody's 5-year bond that pays the coupon and still has the yield. You can buy a secondary bond and then put it into the bond and pay the payment with the monthly coupon. And yes, you will get taxed on it, but again, you can write off interest from the loan as well too. So it should net out no matter what you gain on interest, pay interest, that should net out. You can buy one of the American. I've done it before. You can go on the trade, you go find your broker, bond center, you go look through it. There's either new issues, or like I'm saying, you could go and find existing bonds for sale. So if you guys understand, if you guys understand what that means, it's actually kind of trade and then go to bonds and see. I've done this before. I've done this in the past. You have U.S. 4-month bill draws 5.3 allotted at high 25%. So this is what we said. You go to treasuries, you go to selected duration. Right? So let's go to 1 year, 0 to 1 year. And then you can go to new issues is when you buy brand new. That's the government. They auction it off if you're doing a new issue treasury. These are literally like treasury options. What's up again? 4-week treasury. It's going on now. But on the 4-month bill, you get bid for the 4-week or whatever this is you're getting in on the newest auction. You guys following along? I've done this before. I did this at the beginning of the year. When we were making bill videos and I was telling you about bill at the beginning of the year, saying how cash will be the best trade, I did go over how to buy a bond because I said this is something else you could do. This has been the highest yields have been in our generation. You have seen this for 20 years or so. So it's like, you're getting the fee flattened me because I put it on margin. So do not misinterpret. That's the whole logic. Why? Because I borrowed money to make the play. I just wanted to see how it was going to be. So if I did it on cash, I would have made money. I would have made my $20, $30. But since I just wanted to test it out, I put it in the margin. The margin rate and the rate we got pretty much. I lost like 5%. But I just wanted to see how to buy the option on TV, or how to buy the bond on TV, and how to go through it all. You can't buy it on E-Trade. I might be able to go through and show you. But my E30 still, like, they still have all my personal info on it, unfortunately. In fact, I'm still transferring that account for the new one. But the general idea here is that these are new bonds. So again, you go to new issues, you can buy them, but let's go back, we'll go to bonds. So let's go US Treasuries, we'll go 0 to 1 year now. And then you see all of these are already existing. So this is telling you when they mature, but then you can also see when they were issued as well. So what I mean is you can buy a used bond. You know, like you can buy a used car, well, you can buy a used bond. So this is telling you this one matures in 2024. Let's see, when did they first issue this one? So daily date 1022, maturity 1024. So what are you looking at right now? Does anybody know? What does this mean? So United States 4.375, 1031.24. What is after all of the info I've given you? What can you determine? There is a coupon. The coupon is 4.375, and the frequency is semi-annual. So this tells you a lot. There you go. Look at that. Boom. So this initially was a 2-year bond. Why? Because it was issued in 2022, and it matures 2 years later on Halloween 2024. So somebody bought this bond 1 year ago, and now it has 1 more year left of payments left on it, and they're willing to sell it to you. Are you following? So like literally, they'll sell it to you for $495,000, and by the end of the year, it will mature at $500,000. That's the simple way to look at it, if you want to. So you could buy it though, but you see what I'm saying is that if you bought like a new issue 12-month bond, it may not have a coupon. But if you wanted to buy one with a coupon, you can go buy an older 5-year bond. So that's the whole idea. Just all those companies that help with maturity, all that shit, you know, they have bonds for sale. So, you know, some of them sell it, some don't, but you could buy anybody's bond in here, and it could have been issued a couple years ago, a couple months ago, but pretty much you go through and you find what you want. Again, semi-annually means you only get paid out once every 6 months. So if you're trying to play that game, this may not be able to work out more or less. Maybe you go for a longer duration bond that pays out more actively, but then has less time to mature more or less. Value in year 1, yes, but chances are they probably lost money. Why? Think about it. Honestly, you all should be able to understand they lost money no matter what. And even then, by them selling it to you, the fact that they have it for sale and want to sell it, they're going to realize the loss once somebody buys it from them. Yeah, it should be easy. Interest rates went up. We're talking about a 2-year bond at what? We're saying the coupon is 4.3, 4.37. Costs go a little bit at the high. So why should that be weird? Because guess what? Yeah, your 10 years at 4.7, but what's your 2-year at? Your 2 years at 5.0. You see the problem? In a weird way, why the fuck would you buy this bond? Think about it. It only has 1 more year left till maturity. That would be your only incentive. So like, take a look. Again, you go back 1 year at a time, October 31st, you know, 2-year bond year was like, what was it? It was like 4-1. But again, it's higher, so you can get way more now. But the only reason you would buy that bond is if you want the 1-year duration. But why would you want 1 year of duration left for only 4.3? Because right now the 2 years offering 5, and the 1 year is offering 5.5. Bill 3% is offering, yeah. So you're leaving. If you buy it secondary market, you're leaving market. It does not make sense. The only reason why you would buy it is if you want the coupon payment, because the short terms don't offer coupon payments. Like you want the coupon, and then you only want 1 year of time to tie up your money, and you're willing to take almost 1% less on the whole deal. So, but again, it's not really a rational decision. That's probably why this thing is going to sit here and, someone's trying to sell, 25,000 of these, which is a decent amount. You can offer lower, but I don't think it would get filled. Yeah, I don't think you're allowed to. They give their price, but I don't think they'll get filled. I don't even think they're allowed to offer lower. The person selling still made the money, they got the interest lower? No. Because they bought it at a discount, they're selling it at a discount. So they get all their money back at maturity. He may have gotten a portion of it back. So I don't know if he's winning or losing. It really just depends how he did the deal. But for the most part, it's not as if he gets to keep all the money. So again, if let's say it matures at $500,000, he probably paid $490,000 for it, right? And now he's selling it at $495,000. He was supposed to get his $500,000 back for the return. So he may have gotten a little bit more depending on if he actually paid $490,000 in coupon payments, but it just all depends on how it all played out for him. Yeah, he might be a break even or a little down or a little up. It just really depends. So that's the weird part about bonds, because depending on when you made that deal at what price. So the bond, great question. Welcome to the banking crisis in 2023. Why would you want? So why in the world? Again, this is a real trade. Just sitting here right now in the secondary bond market. There's just this bond sitting here waiting for anybody to buy it. Why would they want to put up his bond for sale? Exactly. He wants cash or he needs cash. That's why he's like, well, fuck it. Instead of waiting another 1 year to get all my money back with 4.7% return, I'm down to just cut it out now because I need liquidity. I need cash. So that would be the only one. A lot of people are rational. This way to say a lot of this rationally. Some stuff makes a lot of sense. Some stuff doesn't at all. Why do all of that when you just put your money in a equal or monitor with the benefits on interest and daily payout? I mean, the real answer, and I hope you don't get offended by it, is because this is just big money. The bonds are the biggest money in the world. We're talking like the minimum thing right here. You say minimum quantity is 500. So the minimum purchase on this is $500,000. Minimum. So, and guess what? Put any money in a Robinhood, you keep it below 250, you're insured. So this is the only way you can put big money and get some level of insurance when it's all said and done at massive level. Sandy's calling it air and lunch. Ever since I saw that Airbnb shits on Hilton revenue, my piece soared. So that's all that I care about. That's all that I care about. Listen, high yield savings are dope. Like I'm saying, if you can go do that, and if you have that option, this is all because we're talking about college loans. So I'm telling you that if you have a college loan right now below 5% interest and your payments are going to restart, you should go take your money and put it into a bill or a bond so that way you can get interest payments on your money you were going to spend for your loan. So like let's say, and how much, someone give me your loan payment. What's your average loan payment? Someone can tell me, I'm going to go with the first couple I see. Give me a real life loan payment on your student loan. I think like what, $350? Is that reasonable? Not percentage. How much you pay a month? I see 500, 325, and then 454. Let's average that out. 500, 325, and 454. Divide by 3. So 426 a month. That sound good? That sounds like a good average, right? So 426 is 33 cents a month. Times that by 12. Okay, that means you're going to need $5,111.06 a year. So you just need to pretty much put in a nothing bill to either get that payment of $426, or you just need to make $5,000 in interest a year, or again find a way. But what I'm telling you is that you go now, put this in the bill, but let me see. We're going to pay for 10,000. Our number's going to be at 5,000. So 5,116 times 0.055. You're going to be making $281 a year. So remember, what's the paradox going on here? Is that your payments, this is all of your payments. You're paying principal plus interest. What are you doing with $5,000 here? You're getting just interest. So that is now, divide that by 12. If you put you're only going to get $23 back with interest. So you're going to, I think you need to double that up. So you're going to need probably 25,000. You might need the whole balance. So you need cash to do it. 1375. Getting interest. No, you're just not getting principal. That's the problem. That's where the gap is forming from. You see what I'm saying? So even at 25,000, you'd be doing. You're still filing. You would need about 100K established. We need to find a way to get the principal. Unfortunately. So if you had, so pretty much you would need the cash to pay off the loan. So this doesn't really help as much now anymore. Yeah, you got the principal is still a killer. So best you can do is you can save 20 to $100 a month in interest operation. Unless you could, the only way it would work is if you could issue, you have to AKA refinance it, right? There's no way that would work. You would have, your interest payment would be lower, but again, I hope you see it. Because if your payment's $426 a month, after 12 months you're spending $5,000, right? But that's interest and principal. So again, even if you don't know the interest rate in this situation. So if you calculated that, I'm sure you would be saving money, but at the end of the day, it's not going to make it where you can set aside the whole amount and then live off of it. This will not work, unfortunately. Yeah, principal depends on how long they've been paying. So it goes into the minutia, but there is an opportunity of it, but it's not gonna save your principal payment, unfortunately, unless you put way more principal to get interest and calculate for the principal as well. Wild question, send an email. We chatted in the video. Canadian, your mom sold her house, has fear of rape, has a Tuesday to try to buy, but who knows if the bubble or stupid month. Anyway, we have cash. I want to diverse states, cheaper places here, short bonds to have cash open, etc. We trying to come to real estate as Canadian. If you join for real estate to get my car, I would join for real estate, but I'm kind of confused. What do you mean, like? So you want to go to a cheaper place in the U.S., but now you're saying short bonds to have cash open and build? I wouldn't touch anything. Like, don't sort anything with your house money. Does that make sense? Don't. Honestly, what you should be doing with that much cash is you know, assuming you got hundreds of thousands of dollars, you know what I'm saying? Yeah, hold the cash until you find something. I mean, if you're down to go to the States, I would fuck yeah, do it. Hell yeah. Or even if you don't want to live here, maybe go buy a cheaper rental in the middle of nowhere out here, or again, one of the cheaper areas, because that could do a long way for you. Yeah, you're trying to double dip. You still got to take the payment out, but if you save on the interest, 100%. Canadian real estate is gutter. I want you to bring that gutter over here. Okay. 20% every year somehow. It's like 5 to, maybe like 5 to 15. I would do it, yes. I mean, co-real estate, we've helped a lot of, back in the day, I used to help out a lot of foreigners. Again, there are people in China and Canada who wanted property. That's one route you could do, but if you want to like really expand, I mean, you can do a lot of different things. I definitely, that's the plan that I've been executing on. Literally get yield, buy houses, and they're a good deal and chill. It's gone a long way. Pretty much getting cheaper in here. No, if you don't want, you don't have to get another house in Canada. Go buy 2 houses in America and call it a day. But then maybe if you get enough cash flow, whatever you buy in America, hopefully it pays enough to cover your rent wherever you want to live at home. Yeah, straight up, honestly, if you're in, I would hit up UMass from co-real estate. That's our Canadian guy. I mean, he helped a couple of chats, even like chats who wanted to buy or sell their home. He helped them out with it for the Canadian stuff. I'll contact him. Email me. No bad. He's got that house, right? He's making blue, and all in Canada too, bro. It's just crazy. You know, again, like I say, Canada's real estate market, man. Up and up and up. You're gonna have to wait a little bit. We recap days in the morning. I'm down a rant about everything once again right before Powell. Market's gonna force Powell hand. Maybe. I said it yesterday. It was very fascinating. I think it's kind of interesting. So, like, do you guys realize what happened to the yen yesterday? This was all on the watch list. So I just know you know, you're gonna be like, wow, this is mind blowing. Wow, this is cool information. You just laid on it, bro. But what happened yesterday with the yen, it died. But what some people were talking about was that it was a messaging error, meaning that, like, the way he was trying to do like a half-ass attempt at like moving the market, but without like changing anything. You know what I'm saying? Like, it's kind of like when Powell does nothing. When Powell says the same thing over and over again. So that's what he was trying to do. He made a slight adjustment, but didn't abandon it. And at first, it was a small reaction, but then what people were talking about, they were like, this was Ueda's crash course. And like, hey, if you try to play it too soft, you know, and the markets fight back, you end up worse off than you would have been. And that's where, in a weird way, maybe that happens to Powell. Maybe Powell does the same dance of nothing and goes both ways, where they want to throw a tantrum by not getting, you know, real actionable info. We just had an example of that happen in Japan last night. So, I mean, maybe that occurs here today. I don't think it's a high probability, but after what you witnessed with the yen, I mean, it does make it very fascinating, considering Powell has done a lot of what the way is, you know, very gentle, very slow, try not to say much and move it, but it backfired for Japan yesterday. I mean, Powell still got the juice. Every time that we do, it's always impressive. Now, Fed futures are literally virtually pricing in a certainty of no rate hike today. Airbnb, the Airbnb buzz.
good or bad. It doesn't really matter as much as just commentary on the other factors of race in the economy, unfortunately. Still to be a pot, yeah, no question, yeah. That's the part where I'm like, man, the market's so messed up. Because remember, last September, we were freaking out on what was going to happen in November. Yeah, the last day that was happening. That was quick. 0.25 is negative. It would be negative because it would be a surprise. So you got to realize if they hike rates, then after everything we've gone through in the Fed futures today, it would be a surprise. Powell hasn't surprised, no Fed chair has surprised the market like that in over 60 years. So what I mean, this is the age-old, you probably learned this here from the Stock Market Live, but we've told you for a long time, whenever the Fed futures price in an outcome, the Fed has not gone against it for a minimum 60, 65 years now at this point. So in general, I don't think that Powell would break everything for no reason today by raising rates, and that is not the expectation. How long would need to pass for you to be confident rates will be lower? 8 months, 2 years? I'm not following. I'll be confident rates are lower when they fucking cut them. That's the only way. Otherwise, the long-term, as long as short-term rates are up, whatever long-term rates are doing is because of assumptions of policy in the future. But at this point, I don't think, that's why I'm saying, that's why it gets so weird, because if it don't go down, if they don't lower the rates eventually, whether it's this year, next year, 2 years, 5 years, the rates will stay up. The VIX at 1732 right now. It is down. Not at the low of the day, but like, I mean, big smash for sure. You can see at the low of the week. And then we're back to where we were at, kind of at the rally of October. The market's much lower. Too late to buy Bill. Did it reset? No, now is the perfect time to buy Bill. Because now it's reset. You don't get the dividend until the end of the month. If you bought it before the reset, you got the dividend and then your equity reset. But buying in today, I mean, this is the perfect time to get it on Bill. The start of the month. So yeah, you won't get the dividend until end of the month, but for equity wise, you know, yeah, you're good to go right now. We have no raise rates for this commentary, just coverage. No. You get the dividend on the first week, but if you didn't own it before the reset, you don't get the dividend. But then it's good if you're at the beginning of the month, you get to take all the equity, and then it will rise up every day, and then at the end of the month you'll either get the dividend or reset. So then that way, if you want to sell out middle of the month, you can still sell out with yield without having to wait till the end. That's the beauty about getting in on the first day. Flying the yen is still the same. For me it is, yeah, but at the same time it's not a plan that is wrong with safety, if that makes sense. Again, I think eventually it will prevail and it doesn't have the same, risk as a bond because it's not duration. It's a carry trade, that would be the risk of the other currencies and values, but for the most part it's whenever it stops moving, that's the only issue, because it can keep moving down before it goes up.
Well, listen, don't do that for the yen. You buy the yen every time we get close to hearing an update. Anytime you get CPI data in Japan, production numbers, the data that's going to prove that they can abandon their policy, that's the moment that I would say, rather than just arbitrarily every week. That's what I would do. But at the same, or again, I've already made I've only got one more purchase left on it, so I'm waiting for the final one. I would buy a T-bill ETF that doesn't pay out the interest and keeps accumulating its share price and you get capital gains for regular income. Not bad, not a bad strategy. Again, but at the same time, just talking to a tax professional, although the bonds do pay out and you do have to pay taxes, again, how it's structured may not be as bad as you think. But that is definitely a good alternative. Just make sure to get ETF, make sure it's backed by the right assets. Apple, new Apple Pencil available to order now at Apple Store for $79. Oh, Eli Lilly, I didn't even see their earnings, honestly. I know Eli Lilly and Novo did good, though. Fine, talk about it anymore. Unless they're supposed to be this morning, right? Oh, really? Any report? On November, tomorrow, so still got one more day. Yeah, that was what I was saying. I still got to make a move. Got to make a move with my NGS shares. How many hours have you spent trading? This year on hours and 57 minutes. You can knock out like 40 hours of Tuesday, maybe 40 hours, I doubt it. That would be next play 2 hours a day for 20 days in a row. I don't think we got that far. Yeah, they set it up so you can't. They know what you're trying to do with Bill. That's why it's like that. They figured it out. They know exactly what the plan was. Instead, I'm going to pin the Twitch link. Again, you guys include it too, just in case it does lag throughout the day or during the press conference. How August after the other announcement, I think we gotta observe Powell's attitude, but I just think Powell is going to prices. I just think a lot of the market, a big theory of mine today, is that a lot of the market is ignoring what God is saying. And that is the simple fact that before we were worried about the market coming down and conditions tightening with rates, it was because oil and economic data was showing that inflation was surging back again. So in addressing that, I think that's naturally going to be possible. But everything else from where we end up, we are going to need to interpret the voice and see what we have because, how the info and Apple will determine a lot. So we'll talk of it. Yes, I mean, yeah, bad guy is the other day. So we're trying to ignore that. And it was time to 9 o'clock, bro. Y'all ready for this, man? Count. 30 minutes until you're all close. Yes, we can take copper. You can wait. It's been an hour since you last asked. That you ready to go, JD? Even then, I remember one of your questions last time. You didn't even bring it up to random. You want that PayPal, huh? You want that PayPal? I can tell they want that PayPal, baby. I'm in it, bro. I know you. Let's go, baby. Let's go. All right. Some analysts are saying they do not expect fintech will have meaningful developments in Q3 earnings. They anticipate challenges will persist in coming quarters due to lack of near-term catalysts. Continue to see headwinds resulting from competition. So that was the latest analyst update leading into it. This is kind of behind too. I don't know. I need to check the analysts that moved. So these aren't the accurate updates. This is mind blowing to me. So I can't believe the main airline comes to mind blowing. My pleasure. Thank you for everything that they do. You know what I'm saying? So don't let my jokes take away from that. It's my pleasure, my friend. I'm excited. I'm excited that you're excited, bro. Let's go. Let's go, baby. So here's PayPal earnings preview. Again, it makes sense. Maybe we'll do Airbnb after this. And why? Because, again, we are going to be getting into Powell very, very shortly. So keep that in mind. But PayPal revenue is expected to be $7.3 billion, which implies 7.9% year-over-year guidance, or year-over-year versus guidance of 8%. Transactions 6.65 billion, others 735. Non-GAAP operating margin 22.1, EPS of $1.23 versus guidance of 122 to 124. TPV of 379.26 billion, ending active accounts 430 million, take rate total 1.9, transaction margin 46.1, full year guidance, EPS expected to be 495, price history since last close. August, PayPal is down 29.3, S&P down 8.3, XLF down 8.6. Near-term options imply a 10% move. Last 4 quarters, loss of 12, loss of 13, gain of 3, loss of 2. Revenue has beaten 13 of the last 20 quarters with 1 in line. EPS has beaten consensus 16 of the last 20 quarters with 2 in line. Forward quarter revenue has beaten consensus 7 of the last 19 quarters, and forward quarter EPS has beaten 7 of the last 19 with 4 in line.
So PayPal, again, they're trading way down since last quarter. Analysts, if anything, analysts are pretty, like, the guidance is low. Analysts do not have a high bar. I mean, everybody's expecting nothing to happen. So if PayPal does bad, or even at the numbers, at the margin isn't good, and then if they surprise, I think they'll get a huge lift because, again, nobody is expecting them to be good at all. So keep that in mind. Yeah, it's awful. It's not, I mean, hopefully none of you are being swayed to believe otherwise, but again, it's a reason, it's a value play. Remember, PayPal has been a company like Sam, where they literally lowered guidance every quarter for like 2 years. You get what I'm saying? So if they come in at the numbers, it's all bad. It's not a good sign. That's what's happened at a lot of their last earnings, but then if they do good and they actually rip on that, then we're good. MVT, FMX, and XL. What's this? FMX, EXEL popping, and then NVT. 2 of them are energy plays. Okay, I don't know if XL is or not. What catalyst do they have to do well? Just really honestly, I think it's just reining in on the spending and the expansion that they had in 2021. It's kind of just normalizing and adjusting to the market. So the catalyst I think they have well is $369 billion of transactions in a quarter, 420 million active users. You know what I'm saying? Like, that's where I believe in the company. I don't think it's going on anywhere. Again, even at $50 a share, the EPS is $5. You know, on the year. So it's like, to a degree, there's stuff with way more premium that you're getting, even though this doesn't imply that there's no premium, but in general, it's just a matter of them stabilizing, holding up, and doing what they've done, providing a good percentage of global transactions, and that will get you a long way if they could just not spend as much and not get killed with, trends changing and going back to normal. You're coming back down here, so hold on. I mean, we were looking very squeezy in the morning, but I mean, you're still doing very great right now. It feels a lot better comparatively, but watch out here if we start to break down, and then, I mean, before you know it, it's 15 minutes till you're on close, and then that's it. What's stopping you from adding to the long term? I have no money. I think that's a good reason, right? I don't know, but I have no cash. I've already invested, and at the same time, I made sure I didn't just go all in on one play this year. So even though plays have gone down, I mean, I'm diversified. I have Pfizer, PayPal, 3M, we got a little bit of the MTW, we have all the other stuff that's working, and then even MO. So I'm just making that Disney too. I'm making sure I'm getting a little bit of everything, but for the most part, I'm down to buy more PayPal. If I had more money right now, it would be my first choice. I would probably wait till after earnings, but it's definitely it's one there. I'm kind of broke. I mean, I don't know how to describe it, but I'm like long-term broke. I have no cash. I literally, I get my deposit. I'll have $2,000 in cash, $200 on the small account, but until I get the deposit, I have no flexibility to buy anything else because I bought everything else. If you have to take Enphase or SCTG, that's what. I don't know. I like Enphase for a little bit, like just because of how it moves, but honestly, with everything going on with all of these, I mean, you might be able to get a little bit, but you'll be good. If you're all in, I've been all in for most of my life, sir. I don't know the way to describe it, but yeah, in the long term, I am. I'm always all in until I need a house or something. Sometimes I ask her for like, I need money from her sometimes. Well, not really. It's hard to explain. She has one of my credit cards, so she carries it. And that way, if I need it, everybody thinks she buys everything for me. And I'm like, it's not what it looks like. I hate it because she flexes too. She acts like it's hers. Just because you'll know, especially if other people notice. Looking at me.
I told your mom to not tell you until you turn 30. That's crazy. You're welcome. That's crazy. Mom is good. I think you look at your mama joke. Damn right, I did. I'm 30 last year. I got a house for you down the line. Like they have some YouTube for the mama joke. That's the main post. Hunter Biden loves crap. Do you really think I only banned you on YouTube for your mama joke? I'm sure you didn't act like you were Hunter Biden and were in the chat with some out-of-pocket shit on the daily. I'm sure it was rules for thee and not for whatever. You know what I'm saying? I'm sure that is exactly what occurred. That your mama joke was that was the red line. I was like, Obama and Syria, that was my red line. I said, nope, you're not going there. I witnessed being soft that time. No, I just remember everything. Unfortunately. So I know your baby back kid. If there's a pattern that you need to pick up on, I will pick on your baby back and business before you do. That's what I'm saying. I can watch all the messages, I see them, I remember, I can refresh my memory, and I'm like, oh, this is a pattern. You see what I'm saying? You know how like I be looking at the chart sometimes? And you know I'm be like, yo, the level, and you know the level? You know what I'm saying? All of you guys have levels as well too. And that's what I'm saying. So like eventually some of y'all just stop respecting the levels and y'all keep going out of pocket and y'all really think, you know, again I say 1,300 hours in a year, bro. Sometimes I'm just like, you are out of pocket. You got pocket. B2's freezing his kid up here. If you have anything left. Yeah, but it's good though. I mean, at this point though, the beauty is that most people have already encountered it so much. So, to one degree, like maybe I shouldn't be a little bit that time. The same thing applies to you. But also at the same time, some of y'all know exactly what y'all getting into when I am in a mood. Like, you know what I'm saying? At one point, you know exactly what you're stepping up against. You know exactly what is like you should, if that is even to the point where you can tell me that after the fact, I'm assuming you are aware then that, oh, maybe John's on this serious ass going to talk to multiple people, maybe his patience, if he's coming out, maybe the middle of it might get flat. I don't know. I'll take this one. Hope you have a good day. I'm just like, what's crap? That's what I did then. Well, your friends with me at 6 rows, what? How did you get there? Yeah, we had a good day. I'm glad you're back too, man. Get ready, though. Today gets even more fun. Trust me, this is a holiday. We gotta recap it. I still gotta give you more earnings, actually. So, let's go to Airbnb preview. I just love it, though. I love that Airbnb. I can't believe it. The Bible, they make more revenue than they do. That's an honor to me. EDR running. Remember, takeover stuff earlier. EDR, big pop. It's only like 0.8, but remember, there was this takeover stuff or like merging with somebody earlier. EDR, big pop. It's only 1%, but out of nowhere. So maybe if Silver Lake said to seek Mugdala back for his ever bid. I got news on that. There it is. So you got the first pop and the confirmation. Well, what's Mugdala back? You got that. I got it early just off the high-low ticker. So that thing started to pop and then it'll close in 7 minutes too. Yeah, what's up with the dollar back? Alright, then I got Airbnb earnings preview for you. Let's keep up the ER. Airbnb revenue 3.37 expected by analysts. The company guided 3.3 to 3.4. Gross booking value 17.92 billion. Nights and experiences 113. Gross booking value per night 157. EBITDA of 1.74 billion. EBITDA margin of 51.7 and EPS of 211. Since last quarter, they are down 18%. SPY down 8.1. XLY down 12.4. Options imply a 9.9% move last 4 quarters. Loss of 11, or loss of 1, loss of 11, gain of 13, loss of 13. Revenue has beaten 10 of the last 11 quarters. And revenue has beaten consensus, or EPS has beaten 8 of the last 11, with 1 in line. Forward quarter guidance has beaten 5 of the past 8 quarters. Cut off. Bosch Health Court dismisses Norwich's suit versus FDA. Oh, bro, that's it's going to be weird because this quarter, I don't know, they guided lower, right? I don't know if their guidance was lower or not last time, but I think it was. But this time, though, I mean, the economy has actually, oil is going up during here. We've had a lot of changes, so I want to see how it's going to play out. But even then, I mean, I just read these things. They've missed revenue 1 time in the last 3 years, and their earnings, watch how it plays out. Even EPS has missed twice over the last 3 years, 12 quarters. So how it's going to play out will be interesting, but I don't know what the numbers will have. But at the same time, I'm hoping that if Airbnb blows it out the water, I really hope it gets the immunity reward and rockets, because, like I'm telling you, I mean, we went over Hilton earnings. Bro, they sit on Hilton. Like, that's what I'm saying, bro. Like, this is not, that's the part. Oh my god, what happened? Bro, what just happened? I pressed the button on my E-Trade. Oh, now it went over here. Oh, that was weird. But, like I'm saying, you gotta go through the market and everybody dealing with the valuation, but I mean, this got me super stoked. Again, their EBITDA, Hilton did, like, I think even Hilton missed a little bit, but 800 million versus, we're talking almost $2 billion of EBITDA. Again, their revenue is 2.6, we're talking 3.3, and that's revenue off of keeping. They're booking $17.9 billion of trade and travel. Like, that's why I'm like, man, I don't give a shit. And you keep doing this, whatever, 4 years, it's at the weird spot. I mean, whoever, who knows how it is, but we're already eating one of the OGs. That's what I'm telling you. This is the whole reason why I like Airbnb. Is again, the growth in tech and the market space that it's in.
it has the ability to take market share. But remember, Airbnb wasn't bigger than Hilton, now it is. So again, by both market cap and now revenue, gross bookings, even EBITDA. EBITDA is earnings before interest, taxes, depreciation, and amortization. So I'm saying after, a couple of expenses and everything, before the final, like a good measure of, not necessarily pure profit, but how much they are earning before the nitty-gritty of taxes, interest, and all of that. Euro close. Honestly, we had big moves from Euro close. With a day like today, maybe Euro close. I need to go to the bathroom though. That awkward. I don't want it to go down on Euro close, but everything's the end.
And let's be clear, within the strategy, energy, there's no other sector that can compare to that. By the way, the activity in this rebalance was the lowest that we've experienced since January 2021. There's only 22 names that went in and out. So I've said the other day less than 4. But we really maintain the energy overweight exposure. But I'll say this about energy. This is a proven quarter. This quarter coming up, it has to happen for energy. Or I suspect that we'll begin to see the strategy reduce significantly the exposure to energy. I think we're at that moment. I think we're at the moment where we've witnessed so far relative underperformance in the energy sector to the other sector year to date. And now it's time for energy to step forward and advance from here to get down the wall. Now, the Asco brand for work sector in October, down 6%. You obviously have a ton of exposure there. We get a ton of earnings tomorrow, before the bell, after the bell, even today after the bell at Marathon. What do you talk about?
So I think from the actually momentum strategy, this is interesting because there's a ton of dispersion of return. Look, this year, the Diamondbacks up 18%. Crushing the S&P, by the way, right? The Energy Transfer up 10%. You see a lot of individual energy names have done very, very well, with the juxtaposition of the veteran, which I also own, is down 25%. So I think it really matters what you own. We prefer to play RSPG, which is an equal way. So I don't want to have 40% of the portfolio in Exxon and Chevron. I want to have more smaller and mid-cap exposure, like the Marathons, like the Diamondbacks. And RSPG gives you that, because you don't have to do such a big, I think, headline of what those two companies do. But I think it's a great momentum strategy going into the forward.
We're equal weighted as well, so we look at it the same way. It's not as if we have,
I don't know, bro. I showed you guys today or yesterday, but oil's different. The one, I guess, phenomena that I have observed over the last couple of years is that inflation time oil, we have really not had a period to determine what energy is doing without an armed conflict, unfortunately. So just like 08, we're leading into the latter half of 08, I guess. But it depends how you want to break it down. But once again, oil is not like the fact that, one thing about inflation and everything else going on, remember supply chains, but all the while, half of these charts, we split it up. It's one war here, and then now you got this other war here, right as it starts to come back up. This was like the only period of like the war stuff kind of calming down or not reacting, and then sure enough, the oil rockets back up, and then we're into another conflict. So that is a crazy phenomenon. I'm like hearing about oil, I'm like, man, it's one thing to look at oil in terms of conflict, but now it's like we haven't really been able to look at oil in regards to inflation, lack of everything else. Rates are not going to get cut today. Right now, is that rates get cut in 2024, based at the end of 2024, based on the dot plot. The only real chance of that, and that's even reflected in the figure. So it'll be like middle of next year, or end of next year, the first cut will be this. If not, if you want to bet $100 for the day, I'm down. If you like to bet, I don't think it's going to change the bet. I'll just say anything. I'll remember the change. Tell me confirmed and lock it in stone. If they cut rates, I'll PayPal you $100. If they don't cut rates, I'll ban you or you give me $100. You're down, you say okay, you say yes, confirm. Say less, I'll bet for you, alright.
fuck out of here, though. You don't need to bet me. I'm telling you, if you want, I think this trade, if you're right, I honestly think $1,000 can turn into $100 grand. If you're right, just go fucking short this on. What are you talking about right now? Don't bet with me. So again, if you go buy the Fed futures right now, don't even short them. If you buy them and we get a rate cut, I mean, you'll make hand over fist on just buying one of these, and then I think you'll lost probably $100, but you're right to try to bet. So there is a way to make the market maker. It's going to be if you let it go out after a day. Welcome to the market, baby. Welcome to the market. Very, very deep thing. There's a lot going on. Now you buy flashy things. Really think there's going to be a rate cut? Fucking buy flat GQ and cut rates. That's going to go from 94 to 99, and then boom, you just made like what, $1,000 a stick or something. I think it made like 50 grand. I think you just get to do like again 1,500 to open it, or 2,000 to about 50 grand. If they did cut, that's just to give you I think that would be, but the reality. We don't get the scatter plot because it's every 3 months, the summary of economic perspective. So next meeting in December. If you think it's going to be a raise, you would sort it, but I don't know if, again, none of that's going to happen, unfortunately. Like I'm telling you, pricing in, right now. No rate 90, this morning it was 99.9, I'm pretty sure. So it's kind of chilled out a little bit, but for the most part, the Fed has not violated this in the last 65 years or something. So that's what you got to watch out for. Is that there's no real odds or possibility or probability that Powell is going to raise or lower rates today. He shouldn't do anything.
No. Hey. No. Fuera. Okay.
That chart should weird you out. I'm telling you, man. Because we were tripping out about November a month ago. And all of a sudden, even with the data, better, worse, whatever happened, those Fed futures blindly been priced in no height. In a weird way, I don't know if they believe Powell or not, or if Powell wanted it, but in a weird way, I mean, I did not expect a month ago that the decision would be this easy. I did not think a month ago that I would use 100% odds, 99, 97% to say, oh yeah, no matter what, nothing's going to happen today. You know, that's where I'm like, man, that's the weirdest part about all of it, versus then, you know, just seeing it the day before, the day of, in one spot. That's not as surprising. If he does nothing, we're going to have a normal Powell day, and then we're going to wait for his conference. And whatever he says, and depending on new information or not, that is how we will be able to react. There's a lot of dating talk in the Twitch. I'm like seeing a couple stock things. You know, scrolling up to other guys are like dating in 2023. The way you say summed up 4s are 10s, 7s and ups are scams. Tattoos and songs are supposed to be personalities. And they going off in here. They're going off about dating. Make a dating app. We talked about co-dating before, and I was like, I don't think it's gonna work with like a 99.7% male to female ratio. I don't know. You gotta definitely find a squad to play games with up 100%. How many times have we played games with that data? I don't know. Did you guys see the thumbnail for yesterday's watch list? I thoroughly enjoyed it. It was
so good because I laughed, I giggled after I made it, and after I giggled, I was like, I don't know. If I laugh at my own thumbnail, that's for me personally. I love it. I love it, bro. I love this. You don't like this? I feel like it looks like a show. Like, I feel like if this was like an entry, you know what I'm saying? Like, you know, like Family Matters, when they would like freeze it on the screen of like Steve Urkel. I feel like this is like Jay, like Data Dependent Jay. He's like, with like the music playing, you know what I'm saying? I've been really just like, I'm like, oh, I wonder who the other characters are. And, you know, but this is like, if it paused on him, like in a sitcom, it would be Data Dependent Jay. I had one queued up for yelling the other day. I didn't use it. I didn't add any words to it. I got her whole ass bottom. You know, I ended up having to know. Remember this one? Biden lifting, Yellen with the barbell, bro. This one goes hard. This one goes hard, bro. Yeah, God, how you love them. As always, God bless you, man. I create these with AI. This is through Nature. This is super, bro. I've been doing this for like over a year. My first AI thumbnail was October of 2022. Or I think a little bit before that. So this has been around for a minute. That's why it's crazy. It's like I'm gonna be fine with the video from the moment I made an AI thumbnail, but still, you know, this is it's been around for a minute. Having fun. I have a lot of fun because it's cool. Like, you know, I've never been like an artist, like a draw pictures type of artist, you know? I've always had a lot of creative ideas, but I've never been able to put them to visuals. So it's really cool because you play around with it, you know, I've gotten a lot better at it, but it's really fun, like I'm saying, every day, like, just playing around, I learned how to create other things, so it's like, it's cool. I don't know if I'd be an AI artist, but it's like, you know, like that's something in my life, you know, like if you ever see me draw a picture, dog, I'm the worst artist ever. We're coming down right now, bro. Hold up. Welcome to Powell Day. 30 points from the top. Back to 42. We're going to hug this. We're going to hug 4,200 coming into it. Back to the rain. That's wild, man. Again, you're below 4207, 4209, all of those. CBC Capital decides to postpone IPO till next year. We go back to the low yesterday, I think that depends on Powell. I think to make that judgment prematurely, I can't get behind it. If Powell is indeed, you know, that hawkish surprise, then fuck yeah. I think, again, like I'm saying, I think Powell could bring this as low as 3,900 on the SPX, but until we get the data, until we have whoever knows what he's going to say, I think this will be the brick wall we'll run into where we can ignore all the technicals and everything, assuming the right setup is there again. The AKA Powell says the right thing. He doesn't say the right thing, so I can get behind Becky's instructions. Any correlation between the time Powell speaks and what he does? No. But, you know, in my process of studying Powell, because I listen to it in real time with you guys, and then I go back and listen to them afterwards. I know I'm a weirdo, but that's what happens. That's what's created this. I also play 2K, but at the same time, what I've noticed is that when you go to read the transcript or go back to the previous towels, they're not synced up properly. Meaning that by the time they post the recap for you to watch it after the fact, then what ends up happening is that, the time he speaks, and if you wanted to see how the market moves, it's off by a couple of minutes. So I pay attention to how long it takes him to talk, between when they start the speech and not, because that's right when he starts talking, that's where everything is going to be based off of. But when you go back to look at it, there is some differences. But other than that, there's no real correlation between how long he talks, time. There is the words he uses to mean that one knows for audience, but that's about it. Song Have It All, Humble said, I remember what I read, I'm like the lender who left the street. A wee little man in the street. You don't know who the little man in the tree was? The lender in the tree? I'm not talking about J.P. Morgan or Jerome Powell. You don't know about Zacchaeus? Zacchaeus was a wee little man was he. Climbed up, popped the sycamore tree. Anybody know that? Oh yeah, look at that. Uncle do that for a rap song. That's insane. Vacation Bible School class. Vacation Bible School class. Oh, the Vacation Bible School is. I got the joy. Zacchaeus was a little man. All of your favorites from church. Bible holidays. Don't forget the cold classes, the classes, library, and the show.
Espera. Apa?
Order now, order cool, this little light pop. Free shipping in heaven. Act now before interest rates so high. That's it. That one ended up holding up. It's another, all the games are sound each other. I'm still talking about it. Honestly, if you see my good stories, I'm learning more about something else too. But I don't want to distract too much. Like what's the changing in techno? But what's the moral of the story? Don't touch these tongues or I'm trying to get to the bottom of this. That's what $7 will do. I mean, usually if you haven't picked up, like honestly, what happens, like I'll go on like a 5-10 minute market rant. Again, we were just talking the phenomena of oil, energy, we're talking about bonds, we're talking about Powell, we just went over the Fed futures, we're going into what to expect, and then usually after like 10, 15, 20 minutes, I just go off on a random tangent, and then we return to the market. That's usually how we do it. more is that there's always wolves trying to change the house. Honestly, I think that's some good advice. Regardless of whether you may not like to hear that or not, in certain contexts, that's not bad. You don't need to spend your context and say, oh, I'm not. I'm just trying to open on it. You know what I'm saying? I'm trying to let people in on the insights. So like, hey, you're going to get a lot of random stuff. But like, you know, 5 was slow. I mean, what we cover in 7 hours, man, it's a lot. So just trying to put you on game. You know, no defense necessary, but defensively game. You know. Bro, even then though, that ink, that was good, bro. I knew it. That shit was meant to be, bro. I'm glad you sent me that one. After listening to that man, regardless, I don't know. He said a lot of stuff there, bro. Yesterday was the perfect day for me to listen to it. You have no idea. I had a long drive, and I was like, yo, I was going to put something on it, and I remembered, you know. And after the first thing I said to you when you sent it to me, to now listening to me, I was like, man, I don't know. Hopefully that'll help you out too, regardless of what it is. If the rates are guaranteed to stay the same from the meeting, is that going to affect the market or what's from the meeting, just the conference? Yes. There might be the chance that they change the statement, and if they do change the statement, that could cause a bigger move. But for the most part, it was, you know, I do think it's going to boil down to the press conference, and then, you know, him talking about longer term rates. Happy Jerome Powell Day, baby. This circle's small and people out here. Dude, it was awesome. Like, honestly, I don't even know who the guy was, but like after I was like, who is this dude? I started looking up, but it was very inspiring, bro. I actually was like, I was kind of mad I didn't listen to it earlier, but I remember that I just said, I was like, man, maybe I'm meant to listen to this the way that I stumbled across it through you, but I was very glad I got to listen to it literally yesterday. So it was beautiful. Looking them bulls out. SEC charges SafeMoon, crypto, and its executives with fraud. I might make the chat listen to it. I didn't know who he was, and I looked into it. He brought up some good stuff about T-Bang, you know, being a T-Bang, I want to change things. Oh, dude, I was mind blown listening. It was very inspiring. Honestly, I loved it. However that all worked out.
Cochino, no.
Bitcoin when it hit 100K in 2021 is Bitcoin more than 20. Yeah, but you have to realize that Bitcoin helped bring in money to the, you know, they help bring money into all of the crypto. That's the weird part. Remember, because crypto is already going up. It's like if there wasn't shitcoins, I think Bitcoin would have went up a lot higher. But at the same time, without shitcoins, there would have been at least 5 million people who would have never invested in the crypto at all without shitcoins. That's the thing you got to realize. The shitcoins bring out the portion of the market you would never have gotten, or that would have adopted Bitcoin 5-10 years down the road.
So again, they have to pay for it depending on how they got clapped with it or rewarded. But for the most part, like that, those shit coins, that's what brings in the level 2. That's where you have, and you know, again, you have guys like me bought Bitcoin super cheap. We're fucking loving it, and everyone's like, whoa, what the hell? Like it's going up. But then once they see, like, okay, I saw that go from tons of dollars to thousands of dollars, and now there's one that's pennies. That's where you get all the people interested. There are so many people highly into crypto and still love it today who would have never bought crypto in their life without the appeal of a semi-penny company or coin offering them. You know, when you were looking around, you were waking up, brand new kids were making $20 million, $10 million, things like that. Bitcoin also don't push the leverage for you to go in and justify the equity. Now they have a bad taste about crypto. Some do, some don't. That's the ironic part. Like, you know, that's why I love humans. You know what I'm saying? Like, this is where personality is so wild, man. You know, it's crazy to think, like, your personality does buy into investment. I hope you guys realize that. Like, you know, you show part of your personality with investment. Because literally, there's like, that's always fascinating. I've seen some people who got own shitcoin, got washed the fuck out, and to this day, crypto is their #1 investment, and they love it. It's so mind blowing. And then, like you're saying, I've seen other people. They're like, I'm never investing again. They're like, I'm not buying crypto or anything or like this. So it's wicked to see how the same event caused. You know, it's very polarizing, or more or less a fork in the road. No pun intended, since we're talking crypto, but it forked people into 2 different directions. Very fascinating. Because again, there's some people I'm like, oh, you're gonna hate this. You can get direction. No, it's like that's what you know. He lost everything. The other guy who's like literally only lost a portion or got anything small, and they're like, oh yeah, I love this. Or they're like, I hate this. I'm never doing this. Yeah, gee, I don't know. It's kind of weird to this day, but it does share some similarities. Like, GameStop and AMC was limited. You know, you couldn't go and work for AMC. You didn't go work a job at GameStop. Like I'm saying, I know people do nothing. We're literally like engineers and shit like that. Got into crypto, NFTs, made a little money, lost it all, but now their new career is working on Web3 and developing and coding. Shit, like, you see what I'm saying? Like, that's where crypto had the ability to, even if it fucked you up, it offered, you know, an economy to be a part of, and some people really did, and they loved it, versus all the other ones. Gosh, I need all 100. Bet $100. What do you like? Want me to pay you $100 bill? I think you can arrange that. If it's available, but I don't know. Get a result and get the man. So I'm sorry to be the bearer of bad news, but this is honestly how I feel about this situation. I hope this situation doesn't last, but it's not. It's really not long. Yeah, Web3. Honestly, it is weird to go from Web3 to AI real quick. Are you guys still hyped on Web3? I know people that still are, but what do you guys think? Are any of you still working on Web3? Do any of you see that as your career path? Define Web3. Alright, so we're going to start with Web 1, then we're going to go to Web 2, and now we have Web 3. Yes, but next question. Honestly, man, it means a lot of things. It means a lot of things. At one point, that's all you heard for 3 months. Oh, I have Airbnb because I was going to give you the preview. Oh wait, I think I already did. Oh. I don't have schema. It was really hype at first. Remember when they were doing all that music NFT shit and like people were making money, the creators, all of that. I still see it. Like I think it was Justin Bieber still be selling songs on it. Yeah, it's a Java issue. I had to update your Java. It'll fuck your shit up. But yeah, I've had weeks I couldn't even load it. Or it'd be like, if I press the wrong button, it stopped working. You just gotta update Java. A couple weeks ago, there was a day I couldn't even open up my trade. But then I like re-updated Java, updated all the Java on my computer, and then it allowed it to work. It's very annoying. I've dealt with it. Like if you Google the problems, like you'll Google it, you'll find shit on like Substack and people explaining it. But like what I realized is that just update, make sure your Java is installed, reinstall it, update it, and make sure like Java has permission. And then be careful too, because if you give Java too much permission, it's not actually version 2, but that's what I think it is. Fix my internet. So we had an issue and then I wanted to make sure we had no problems, especially coming in the holiday and everything else. We're talking about fixing E-Trade. So sometimes your Trade Pro, it just may not load. Like I had very weird issues where like it would take me 10 logins in the morning just to load it up. And even then when I load it up, it just wouldn't operate. And it's usually an issue with Java. Because E-Trade is it's a Java-based application. That's how everything runs and does it as fast. But if you have one problem with Java or you update your computer and your Java falls behind, your E-Trade will suffer for it. Well, again, weird day so far. Bro, it felt very good in the morning. You're back to the first little level in the morning. Bonds were doing very good too. Bonds are still killing it. Bonds are still above pre-market, but they have calmed down from that little high. So, and then we did have Euro close. I think we sold off on Euro close. Oh yeah, we went lower. We were selling off ahead of that. That used to work, but it just, I'm telling you, something, I don't know if it was my, remember, it's like earlier this year, I had a lot of E-Trade issues, but I just, once I updated my Java and made sure all of my Java settings were correct, that is the root of the problem I noticed a lot of times. Doesn't take an oracle to see that Java is your problem. Your friend Mainnet would have killed. Standard deviation, 163 to $9. Oof. That's good, but it's not at the same time. Because I would have never bought 2 standard deviations for $1.60. I feel though. But no, what time frame did you go on? And I'm looking at these. Alright. A lot of them yesterday, they wouldn't have hit. So, maybe if you have time, but 160 is kind of expensive. these ones went from 80 or 90. Like this, maybe next week's gonna hit 50 cents to $3. Again, last time it hit, we hit 2,000%. That was this year on an option, just literally 3-4 months ago. Yeah, next week's you would have had like maybe 300-400%. That's a little better, but everything else, I was kind of happy I only went with one play on the downside. But definitely, the ones with a little more, you would have got a nice game. I mean, Atlanta killed it. Late to the game, you recommend crypto to a new investor or stick to stocks? I would definitely stick to stocks now. Why? Because stocks are at a discount. You know, maybe not NVIDIA, maybe not Meta, but, you know, we were able to buy those last year at a discount, but you have way better opportunities there. And then I do think once crypto does come down, you may have a great opportunity to get in. But what JP is telling you, take 10% of every paycheck, every dollar you touch, put it into good stocks, and then you do 90% for whatever else you want. But, you know, if you start now, start early, build a portfolio of owning good names that you know about that are really, you know, big parts of the United States economy, you're not going to go up. But I think, again, right now, the stocks are cheaper than crypto. So why would, you know, if you are going to go to crypto, I wouldn't touch anything except Bitcoin and Ethereum. It's not a recommendation, this might be. Depends how bad things get. We need a lot of bad things. Gaza's Rafah border crossing with Egypt will open on Thursday to allow foreign passport holders to leave. Solana will take over Syria. It shouldn't. And if it does, it shouldn't want that. Remember, Solana was founded, or partly founded by Sam Bankman. It's a fraud, unfortunately. Maybe it finds a way to rise with that history, but I think the plan was fine. I can see Solana sleeping, call it a day. Bitcoin, Ethereum. If you really insist that you go on Ethereum, but other than that, I don't. You know, Solana may be good, but don't forget its history. Solana is tied to Sam Bankman. No, everyone asked me about Kava. I still haven't taken it. I think every IPO this year has dropped too. Solana still fraud, says Twitch. First time chat on that. Solana's been hacked 2 times. The profits everywhere else. Yeah, I no shame in saying that. Standard deviation. Go look up the video, or like go watch every other watch list of the last couple of weeks. You know, I've made an effort to recap it on the big earnings. I think at least once this week or last week. Otherwise, you can search how I turned 160 into like $2,000 on Tesla. I literally explained the standard deviation. I don't like crypto. I don't think you guys get it. Like I'm telling you, Sam shit, the fact that it's outperforming. I mean, again, I didn't like the market this year, and then eventually it comes down. But with crypto, bro, it's just like something's wrong with crypto, in my opinion. Something is very disturbingly wrong with what has happened since Sam Bankman. So again, I still own some crypto. It's not as if I can tell you with everything, my answer to this next decade, it truly is diversification. But I just don't, I can't get behind it, unfortunately, until we let things wash out and it acts like real consequence. There hasn't been a real consequence of multiple frauds, hacking, scams, all of it, and it's still holding a price that I'm up, still 50,000% on, or something ridiculous. I've been in this state for a long time. I've seen a lot of shadiness and things get over it, but I'm just telling you, the Sam thing everything, the collateral. Remember the issue, you saw how the market freaked out about collateral that was a government-related bond. You don't even fucking know any collateral attached to however many billions of dollars of SAM, all the intermediaries, and all the other parties. I'm not trying to get people to not buy it. You like it now, that's what I'm doing. Again, I own a lot of crypto still. It's not as if I am a no-coiner. And I got a bag. I got a gigantic bag in crypto, but at the end of the day, it's not a... I'm not down to throw any money at that right now, and I don't think getting in on crypto now, it just does not remind me of getting in on. I told you guys at 10,000 in 2020, back in the day, literally go to the trading fraternity, you will find videos of me in 2016, 2015 telling you to buy Bitcoin. It's like I love this space. Don't get it wrong, but I don't think now's the time to start anything with it, and it's hella weird. And unfortunately, there hasn't been a consequence of some of the most deepest shit involved in it that is related to collateral and a lot of things. I just still the fuck out. Unfortunately, I'm just creeped out by it. I know it's outperformed this year, so my take has not been helpful, but like I'm saying, it's just like I don't mind holding Bitcoin at the long term and adding it in there, you know what I'm saying? But that's it. You're right, it is the most transparent system we've got, but for some reason your judicial system, your government, you don't know who are the creditors. You don't even know the collateral. Once we found out banks' collateral was doxed, we were down 20% how fast? Bond yields ripped how fast? Right? You literally, the minute we found out one bank had bad collateral, that bank was sent into receivership in 48 hours. Same thing for the rest of them. Right when your collateral got threatened. And that's why I'm saying you have been denied access to the information on the collateral that has all been tied to Sam Bankman and potentially upwards of $10 to $20 billion of fraudulent transactions that have got to spread through the ecosystem for over a year and a half, 2 years. So that's all I'm saying. That's weird. It is transparent, but until they tell us what wallet is what and that, who's holding that, it's insane. That's why I'm like, to not have a consequence and go up 30% from there, something that does not sit right with me, unfortunately. All we keep talking like somebody's going to fix the broken system. All we want is to make like 500 on Bitcoin. So we're not having a real discussion. Again, I bought Bitcoin at $300. Like $300. No abbreviations, no nothing. You know what I'm saying? Like, I get it. I want people to make money. I want people to make more than $500. Again, the last alert we had on buy Bitcoin was buy at 10,000 in 2020, and I sold out at 43 to 46,000. But it's not about the money in the sense, like you can make money, you can make $500 a day flipping it. I'm not against that. But if you're trying to say that you want to go and buy it and hold it and treat it as a long term after it rallied another 35% this year, I'm just still scared of crypto. This is my answer. You can make money as much as you want and go back and forth all day, but yeah, it's not what, I just don't think that opportunity of buying and holding on it right now comes without a massive amount of risk. The SPY's not up that much. I hate to break it. Unfortunately. So what I mean by that is that pull up the chart, we've been at the same spot almost for 3 years. So again, if we move up here, you were here in October 2021. Again, in August, October, we were a little lower, but you start looking at the chart at different points, a lot of things have been very stable.
believe it or not. That's the irony of all of it. Even Bitcoin, I mean, this was actually low. But like I'm saying, I think I sold out around this drop. It still hasn't even recovered that. I wanted to get out here, but my escrow didn't open up until later. And again, you know the story, but in general, this is a pretty wicked chart. Even the 3 years now, Bitcoin's the same 3-year spot. Beginning of January when Elon pumped it, you're at the same spot, but so many things have happened, and now interest rates are higher. You don't know the full extent of the biggest fraud that have occurred throughout all of it. And just, I don't think it's the same entry of 30,000 with Elon getting in. It's not the same, unfortunately. At least in my opinion. Again, I already have some, so it's not like I miss out on it, but I'm just not really willing to add more to it at this point. Great. Well, market's moving around here. We're waiting on power. We got over Euro close. This was Euro close, so we're back up to the Euro close point. Maybe it does, but just watch the 4,200. Very solid point. So we have massive upside on all. Don't buy right now. I feel you. As long as you approach that responsibly, you'll be good. Because until crypto opens up buying opportunities, you should probably be buying bonds or getting yield back on your money. You see what I'm saying? Again, I have all of that crypto money in bill for the last couple of years. Or the last year when we did it. Again, I took the money, I bought houses with it. I've been waiting to buy back in. Again, all of that profit that I made, I just stuck in the bill, waiting for the time to go buy it. Again, if interest rates are higher than it's ever been, I'm down to collect off interest for this period until crypto can return, and once we get low rates and all of that, and then let more things work out. The entry in this, that's why it doesn't make sense. It doesn't make sense because my previous entry, which I thought was high, that $20,000 you're talking about is still higher. You can't even pull up my entry on a 3-year chart. We got in October of 2020. So literally, Bitcoin was like $9,000 to $10,000, and again, I bought at 300. I was like, it's expensive, but with what was going on, the happening, the low rates, everything, I said it's time. And again, we did it all live on stream, but like you're telling me now, after all of that fraud, everything, that 20,000, 100% higher than even my last purchase there, which was a phenomenal purchase. I can't justify that with everything that went on again, and with interest rates paying out. So eventually it'll go. I'm not saying Bitcoin's going to die, but until there's more clarity and more macro coming out, that's it. Yeah, so $100 or less for Tesla, unfortunately. They want that in the long term. $200 max risk, and you're still limited by, at the end of the day. You already have you're going to go $30 for Powell, that's insane. You know, an extra 30 for Powell, you take the other 170 and call it a day. You know, the successful funded traders on Wall Street, like again, most people that I've ever encountered, like even if they started as like a retail trader and wanted to do the trading for a living, if they actually killed it, they just ended up going to Wall Street. So they ended up making their own hedge funds and other stuff like that. I don't I'm not really like traders, if that makes sense. I mean, it's cold, but like I don't really know what people are doing, more or less. GOP is right because inflation was coming back up. The economic data got good.
And then Jerome Powell started talking about how he's going to raise it up. And then that's it. Top firms are a scam. People will tell me differently, but I don't get paid, nor is my money with them, so I'm incentivized for it to work out. They don't hold my money, I'm not hostage, nor am I promoting things. But we're not going to get into that topic today. It gets people riled up sometimes. JP Morgan, I think our purchases are 126 and 116. So I think below 116 was fire. I think the 107 was not something. Funds like Michael Burry have long term. I think the aspect of a hedge fund, unless it's like a fund where it's the whole long, I mean, they'll hold some stuff, but it's not, they don't have the same commitment of 10 years minimum. A lot of funds don't run like that. If anything, those are just family offices now of the day, and the bigger funds that they're not necessarily there to go after a gain as much as capital preservation is adequate code. I don't trust any of this. I mean, if you're really good at it, I can't run any time now. Yeah. I mean, it's simple. You might think you want to just share something there that people privately, but I'm not going to give a platform for people, so most of the time. You know, the only time I've ever done that, like, again, like, I've given you, like, usually if they're, you know, like, my info and you will not ask me for anything. Stuff like that, that's what I did in life. You know, what we gotta do was to not follow you and the one who don't really follow you. The parents that don't know where they got you. But, I mean, yeah, it's all a little fun. That's the thing, I don't play along. You guys have to know this. I am not good for brands, I'm not good for business. That's it, I see my mind. Enough money where I don't want $1,000, I don't want your $100,000 promotion, I'm not here to circle jerk with you, sell something, but unfortunately, I mean, you see it, you get ganged up on pretty easily, all it takes is 5, 10, 3 motherfuckers who want, you know what I'm saying, like, I'll be doing it, but like, I'm not here for business, I'm here, I really do love it. Again, after listening to that EP thing that he sent me, bro, like, I'm telling you, like, it's real, like, this is something I love, bro. Like, you have no idea. From the moment I turned on the screen, nobody was here. Like, you know, how my life culminated, my experience, and everything that led up to the moment where I could, like, turn this on, share it with people, and, like, a genuine connection. And again, where I'm saying, like, yo, nobody, you should have access to the highest level of stock stuff without anybody throwing a paywall at you. Again, you see the reality, you watch people amazing, you watch the good, the bad, like, you know what I mean? At the end of the day, I love it. I love me. Like, I love that. People around me know that, like, all of it. But again, bro, I've seen views go up, I've seen views go down, I've been punished, I've been rewarded. It's like, you don't keep motivation to show up if that's not the case. Like, you know, I didn't really love it. That's why I'm saying, like, you know, there's not too many people out here who love this shit. And, you know, I'm not here to promote myself and, you know, saying I'm better than everyone, because I'm not, you know, this shit too. Some of you got to see all of it, but at the end of the day, it's like, a lot of it, don't underestimate it. Wall Street is a lot of money. Everybody wants to party with that money. They're young stuff. They all work together. Again, it'll be nice to do if you help them sell more shit. If not, you're going to be outskid. It's the same thing. It's the same thing as a lot of other industries. But, you know, I hope you just, I hope you can learn the love that I have from you, because I know you will be successful. And if you learn the long term, those skills as well, I know you will be successful. It's like being here for the right reason, being who wants to do it because you love it, man. Nothing will ever replace that. I mean, you'll see all the bullshit. You'll have the ups and downs. You'll sometimes good, sometimes bad, but, you know, it's there. You know, it'll do a lot for you, but you gotta have to love it. Again, I said this the a lot of things in the market, they're trying to give you everything you want with like a minimal amount of effort. And that's why, you know, that's how you know it's a problem. Right. With the set of work, you know what the setup has. That's what this whole industry is built on. It's not. You know, we've had a lot of talks on it. Maybe later, you know, we got to start preparing for Powell here in a little bit. We only have 30 minutes, man. Drone attack on coalition base in Syria on minor confirm the test off, don't ban sure, if you buy your ticket out, I'll let you buy it out for $20 right now. But you guaranteed me 100 if I was correct. So if you want to buy out early, $20 to that super chat. Otherwise, yeah, in 30 minutes, we're gonna make our decision. Like insurance? Yeah, I hate when they ask me for insurance at the table. You know what I'm saying? I hate it. I'm like, no, I don't want insurance. I'm poor. Then why did you make the bet? I mean, that's crazy. Yeah, we have 30 minutes, so give it 5 minutes. Let me go get me a drink. Let me go get me some water. Like, you know, go pee for a little bit. And then we are going to, we're going to see what happens, man. We're going to see what happens. That's it. We're going to go, we'll recap everything, though. So it's now like 5 minutes here. Let me go to the bathroom. Let's get this all set up. And then we're going to go over the roll, our hole. 15 minutes before, I'll give you mine, and then I'll see if I can get analyst comments. Alright, I'll be right back. Follow me on Instagram, Happy Freedom Fraternity. I love you. God bless you, GG.
So the subprime lending market, competition heated up in 2015 and 2016, and there were a lot of new entrants to the space. So issuance of subprime auto ABS has been at record levels over the last few years. So there's just a lot more transactions underlying the index, including those from smaller, newer, deeper subprime lenders. So there are lenders that are even at 20+% 60-day plus delinquencies. So it's a dollar weighted average, and I think that's an important part to understand is that the composition has really changed. But note that, right? The subprime borrower is under stress. Rates are high, persistent unemployment, persistent inflation resulting in reduced real income. The subprime borrower is exhausted. The pandemic-related savings that they built up. So delinquencies and defaults are rising.
How much of this, it is important to understand the composition and the change there, and thanks for pointing that out. On the other hand, well, not on the other hand, but in addition to that, right, we have gone through this pandemic where people got these stimulus checks, right, and they were allowed to work at home, and people may be finding ways to make more money with less work, and reaching to a car payment that maybe wasn't advisable. How much of this is a leftover, kind of a hangover from the pandemic?
Yeah, certainly. Sort of mid to late 2021, saw government stimulus roll out. So really what they're doing is pulling themselves out of historically low. There's still a lot of utility being significant and the priority in that payment, so that could be a factor that leads that's further deterioration.
What is this going to mean for credit, or what do you see when you look at especially these new entrants with such high delinquencies? Are they much more resistant in giving out credit? Are they starting to pull back?
Sometimes they want to pull back. Sometimes they're reducing or even eliminating that those credits to the borrower. They're also making changes to things like thresholds for PCI and DCI. Sometimes lenders is has really shifted into underwriting is so automated that lenders can make changes in the access to the environment very quickly, and we're seeing that.
Marty, thanks so much for your time. Interesting story. This is the kind of data that we really need to watch, and the Fed is watching, I'm sure, as well, in order to make interest rate decisions for the future. Coming up next, speaking of that, the surveillance team takes over as we await the Federal Reserve decision at the top of the hour. Tom and Lisa joining top of the hour. All right. Antonio. Yeah, Antonio.
30 minutes until the Fed FOMC, an hour until Jerome Powell. Okay? So, don't forget, it is the statement, press conference next year. Alert. After this. Paid attention and listened earlier through the watch list. A couple of minutes left. I don't think today is going to be that crazy in the sense that a lot is expected for nothing to happen. But there is a couple of things we got to be watching out for. So, you know by now, I hope you know the key words, and then yeah, go to the Twitch again. No, it's YouTube. I have YouTube, bro. So, yeah, I have what's going on right now, but my YouTube one, this one will just cut out randomly. So we have a backup screen if you don't want to miss it. Pinned above right now in the YouTube comments. So, anyways, like I was telling you, the word that you need to be looking for today is financial conditions. I don't know what's going to happen, but the way I'm looking at it is I do believe when you hear him say financial conditions today, he is going to talk about long-term interest rates. So when he does that, I think the market is going to move on those candles. So during the press conference, if you hear him talking about financial conditions, tightening, loosening, bringing up long-term rates, that right there, those are going to be the candles where he rip and drop and rip and drop off of it. I really do believe that for some reason, just because that was the latest stuff he's kind of talked about, and that has been the major story. Okay? So that's the first thing that I really want to make sure everybody knows. But then, like I said on the watch list yesterday, the problem that I have is that I think a lot of the market has ignored the context leading into Powell. That being said, I think initially, whether it's at the statement or whether it's when Powell starts talking, right? I believe that right when he starts talking, it's going to sound very hawkish. He's going to, you better expect it. This, everybody in the world is expecting this right now. Say a statement talking about how if inflation goes back up, he is gonna, he's gonna add and do this and do that. And he's not afraid to raise rates, right? But above all else, I still think the market is going to respond hawkishly initially. Why? Because the context of the last 3 months, before we were reacting to anything here, we were dropping because of oil going up and economic data being very strong. Even Powell, at other times, that's what helped him come up with that dot plot that caused all of this. Powell is aware of all of these factors. So that's why we do have to just watch out for his attitude today, because Powell's not an idiot. I said this on the watch list yesterday. You really have to understand this. Jerome Powell knows what he is doing. He knows what will sound bearish, what will sound hawkish. He knows that the market will try to front run him. He is very well aware of the communication mechanism. That's what he said. You've heard this from Powell. He says he is aware of the communication method. He is aware that if he says something bullish, the bonds will get a bid. If he says something bearish, the bonds will sell off. He is aware of that. So that's why I'm just saying, regardless of anything else I'm telling you about today, just be aware of his attitude. You know what I'm saying? Just the little words he says, how it strings together. But like, you'll know if he's being cautious or not. You'll know if he's responding to, and what I mean by he's aware, bond rates just blew up. You know what I'm saying? The last month, the last 3 names, your guy is aware of that. That's why I'm telling you, the financial conditions and long-term rates is the most important thing here. He knows what has happened. He knows the impact, and he knows that the markets are already reacting to it. So how he wants to go about addressing that, I do think that's going to be the biggest problem. Like I said, going back to the beginning though, why do I think Powell will be interpreted as hawkish? Initially, I think it'll be hawkish. Then after that, I think they're going to brush it off, or we're going to respond to whatever he says about said financial conditions. But the reason is, people are missing out on the context, but also that is what happened at the Fed minutes not too long ago. How many of you remember? It's actually the start. I believe it was right here. Yeah, August 16th. No, October 11th, was it? No, it was October 16th. Or August 16th, excuse me. Right here. We were already dropping, and then we died right here. Why? Novo hires QPW to deal with weight loss drugs. Oh, that's good news, I guess. Remember, they're running out of supply. That's been their problem. Why did we drop August 16th? Minutes. The Fed minutes. We never moved on Fed minutes. And then that led to your first little flush here, where it's also the exact spot that you flushed leading to where you are today, the last round. Why? The hawkish pause. Hawkish pause, hawkish skip. Remember, it was one of those, the meeting before, right, on July 26th. Look at, we were doing good. You had the up and down, you went up. But then when we got the minutes for that meeting, we were reminded of the hawkish skip. We were, remember, at the time, Powell said we're going to do one more hike and then we're going to start slowing down. He kept it around the same, but he was being hawkish about all of it. And then what happened? Once we were like, yeah, it's good, we started dropping, and then a couple weeks later, we were reminded about what the hell he said during that speech. Even though the data was old, we were reminded of how hawkish it was, and everyone was like, damn, the minutes were really, really hawkish. And everybody started selling off. So, No, the SEP was right here. You got an SEP in June. Not at all. This was just the Fed minutes. We had the biggest reaction on Fed minutes, and it was all because of the hawkishness that preceded 1 month before and you already knew it all. It didn't even matter. You already had the Fed meeting and all of that, and we still had that reaction because inflation was up, the data, and everything else. And then it led to this type of reaction. So that's why I'm saying I do think that the last couple of months we had a reason for Powell to be bearish, and then lately it got bad with financial conditions. But now I think once we hear what he has to say, a lot of it will be on an older context, and that's going to scare people. But then once he starts getting to the new stuff, then it's going to be a toss-up of either bounce or not, or good or bad. That's my there's the first two things, and then, like I said, it's boiling down to financial conditions. I'm telling you. Otherwise, everybody today says this event should be nothing. Believe it or not, most analysts, most funds, they came out today and said, well, you know, the data in the morning was more important. People thought the bond refunding was more important. The data, whether or not we actually get relief, they're saying Powell is going to stick to the same script, which I agree with. I think he's going to talk about, he's going to make sure you know, and this could come out as really hawkish, but he's going to make sure you know that he is not raising rates, but he will if inflation comes back. So other than that, though, it could be a simple meeting today. There is the possibility. The only other thing that I boil this down to is that although everybody wants it to be a non-event, I'm worried about the financial conditions and how he discusses it. But the fact of the matter is, you're right at the point. So I think this is going to open up the door or the trap door, and then we go from there. And then the final thing, I'll just tell you, because I told you guys early today, again, I'm recapping a lot of what we were speaking on in the morning and on the watch list, so you should all be prepared by now. But the only other thing that I would say is that there's one event where we die today. There is one specific scenario that I believe will lead to death and destruction instantly. And that would be if Jerome Powell talks about long-term rates and he talks about their effect on financial conditions, but he says that long-term rates need to go higher for them to feel better about stopping inflation with long-term rates. So if he pretty much says long-term rates need to go higher for us to get to a place where we feel confident, then that will be the most bearish thing of the day, of the month, of the year probably. Because then that's Powell greenlighting, destroy the long end of the curve so that we can slow the shit out of everything down. But then again, that would be a new change. Because last time he discussed it, and this is what I mean, if you're not understanding what I mean by financial conditions, why that's the most important thing you need to listen for today, you may be missing out the point. You need to understand financial conditions in context of higher long-term rates. Do you understand? Powell has already addressed this in the last 30 days. But the whole general idea is that when long rates go up, it tightens financial conditions. So that's why if the financial conditions, they've gotten tightening, but then you have to ask yourself, is Powell, that could be good for him? If he says long-term rates are doing a good job of tightening, then everything's good to go. If he says the reverse, then you have a problem. Refresh if it is. I don't know why it's doing that. Twitch is working beautifully right now. Senator Kennedy? Exactly. Let's see what we have here. I can play them. How do you press play?
Inflation has fallen. But we all both know that's disinflation. That just means it's going up less rapidly.
Exactly.
Prices have not fallen. Unless we have a recession, a fairly serious recession.
Great, before Powell, are you fucking kidding me?
With us
for the rest of our natural lives. The employment, however, is very strong. Afghanistan, very strong, humanity. And if you look at history, going all the way back to the 1950s, the 10 periods of disinflation that we've had since then, based on history, unemployment ought to be minimum 6%, 7%. It's obviously not, and that's a good thing. But I think what has steered that was the pandemic, and there was a lot of slack in the labor market that has been absorbed. But I say again, I give it a D.
I honestly, help me get an interview with him. I'll try, but like, listen, Chad, you could get me an interview with this guy. I will sit down and talk to him for 10 hours.
Have not seen raises higher than the rate of inflation.
Exactly.
So if we turn then to, the top orders of business in Washington, foreign aid, obviously one of them, we were just talking to Congressman Sherman about how exactly that's going to happen. Not clear if these IRS cuts are the right way to try to offset that spending. Is it important to offset that spending, or just more important?
Why? Because he's so funny.
I'd rather see somebody.
I don't even know what policy he stands for, but his personality has just drawn.
Looking at,
Exactly.
most Americans look at, the two major issues right now.
He's being calm right now, too. That's the crazy part. He's being more politically correct on CNBC than on the floor of Congress.
The Fed does, but you can't really get inflation under control unless you attack it on the monetary side by the Fed and the fiscal side by Congress. And the reason that the president doesn't have a plan for inflation is because it would require him to spend less. Number two, the biggest international issue obviously is parts of the world are on fire. And it is clear that China, Iran, Russia are working together. Their goal is to have China dominate the Indo-Pacific and Sub-Saharan Africa, and Russia dominate Central and Eastern Europe, and have the Ayatollah and Iran dominate the Middle East. And that is not a world that is safe from there. We have to address. So let's talk about the question of sending military aid to Ukraine and to at the same time. Do you expect that those two
We've been on news for too long.
Congress
Like a lot.
Congress, and where specifically are you sending more military aid to Ukraine? Good question. Right now, President contradicts most members of the media on Capitol Hill are interested in talking about process. Because the process is sexy. Who's mad, who's up, who's down.
Exactly. The process is sexy.
Exactly. We don't know what's in this bill. We know it covers Taiwan, Ukraine, Israel, the border, and a whole much more than what's sustained. But we don't know the details. And I had a conversation come out of this services or supplemental. And I had a conversation with him.
Voted no on the CHIPS Act and debt ceiling suspension and on the Inflation Reduction Act.
We'll get some language that everybody can look at, so we can look at the substance. Forget the process for a second. Okay? That's what a lot of people want to talk about. Has the House gotten the edge over the Senate? I don't care. That's not, I'm interested in the substance.
Exactly.
It doesn't sound like there's that much in the shadows here. It's basically as described for Israel, Taiwan, Ukraine, the border. We're seeing a dollar amount. So what's the holdup?
It's how they spend the money. I've seen plenty of money go to presidents for border security. But when define border security, some of them, some presidents define it as securing the border. Others define it
Yeah, don't say sexy. I vow will sound loud. You don't say sex
how
box.
they're going to spend it, how much of the money for Israel, for example, is going to go to humanitarian aid. I'm not against help to the innocent people. I want to help innocent people. But I want to know how much money you're putting up. How much money the EU is putting up. How much money the UN is putting up. I want to see what the assurances are that the money we give for humanity.
He's not as fun when he's not a congressman.
This is the last printing press in the U.S. where books are handmade from start to finish. Every letter of an Ariadne Press book is created one by one. Together, they make up a book that can take years to produce It costs up to $10,000 to buy. Each book begins in the foundry, where Brian Ferret spends his day at a monotype machine from the 1890s making individual letters. He lights a fire under the machine, melting the lead, tin, and antimony solution that is used to create the letters. From there, the lead goes into a mold. He sends the finished type down the hall to the printer. Jeff Raymond arranges the type into a page layout, letter by letter. To keep the page together, Jeff wraps it in string. Then, he brings it to the proofing press to check for any mistakes. Once the proof looks good, it goes to the final print run on one of the larger presses. The final stage of the book-making
Of course,
process
you can talk about it with Peter Pan, but it doesn't mean it changes the process. Where's it going?
piece of the book together by hand. The final product is a work of art.
Now, it's all time. If you don't like this guy, you clearly don't like a border collie then, and hate puppies, and you don't like Bob Barker. Exactly.
What I do on this bill, I'm helping negotiate a border security bill, and I would, if I was President Biden, and after I did that, I would bear hug it and French kiss it.
Exactly, there you go. I take a deal and I bear hug it and French kiss it and I take it home with me. Exactly. Amen. I reclaim my time. Okay, thank you. I yield back. He said, "Again, I not. Do you want me to French kiss your hair then? Is that more acceptable? Thank you." They're trying not to die of laughter. Look at them. That's why they cut the screen off so quick. So was that Carl? The Carl Kinsey? I don't know if that's him or not. They cut it, bro. They were trying not to die of laughter, bro. They're like, because that's it, bro. He came in at the end. He was like, and exactly, I'd give it a bear hug and then I'd French kiss it. Am I not allowed to say I French kiss it on the forehead? A little bit of tongue action. Yeah, I'm not saying that's fine there. It's simple. Metaphysically, it'd be a metaphysical. I'd kiss it metaphysically with my tongue if I had a deal presented to me like that. But until then, it's just process and processes. Exactly. I yield back. Thank you. Have a wonderful day, Ben. That's great. I can't believe about it. That's what I was telling you. I was like, that one he seemed more calm, but don't let it get you. But now, Caledonia, I still got more. We got 10 minutes still, pal. Not to fear, so here it is. What do we got? The Fed is widely seen holding the benchmark interest rate today in a range of 5.25 to 5.5 at today's meeting. We heard from a slew of policymakers leading up into the event. Leading up to this meeting, and even some of the more hawkish members signaled that they supported a pause. If that happens, it will be the second consecutive pause and the first time in the tightening cycle that they have held rates for so long. So again, the back-to-back pausing, baby. The back-to-back pausing. Oh, remember, they paused it. That's what it was. They paused in July, then they restarted, and then they paused. They triggered me. So I think we did technically have more than 30 days, but then it adds up. But again, because they re-raised it, but now this will be 30 days and then 2 consecutive pauses. This will be the first time. So here we are barreling toward the end of 23, and who can say for sure that the Fed is finished raising interest rates? While no change is expected today, Powell will likely warn that inflation remains high and that further tightening may still be needed. Not everybody is convinced by that message, but not everybody is convinced that inflation is on a glide path back to 2%. Regardless, it has been another extraordinary year, and remember that as recently as March, derivative traders were betting on rate cuts this year, barring the shock that that's probably not going to happen. From Bloomberg's economics Anna Wong, she says, in a well-telegraphed move, the FOMC will likely hold rates steady for a second consecutive meeting. Even though core inflation crept up in September, a whole summer of disinflation means end-of-year PCE inflation is likely to undershoot the Fed's latest forecast, allowing officials to wait a bit before deciding if the final rate hike is needed. The Fed is likely to maintain its tightening bias after recent economic activity. Surprise to the upside. That said, Bloomberg expects the labor market to cool quickly over the rest of the year, which is why we do not think the Fed will hike again in 2023. One of the big reasons Fed officials feel comfortable pausing again is the recent Treasury route. Yields on the 10-year note have climbed more than 100 basis points since July, briefly rising above 5% in October. Some policymakers attribute a lot of that move to a rise in term premiums as an increase in the compensation investors demand for varying interest rate over the life or the risk over the life of the bond. The development is obfuscating the need for more Fed action in the short term. Market consensus is generally dead on the FOMC, leaving rates unchanged. Equities-wide, this isn't necessarily a bad thing. Bespoke Investment analyzed the average path of the S&P 500 on Fed days since 1994, and the FOMC began releasing its decision on the same day as the meeting. The chart below will show that when policymakers hold rates steady, the S&P 500 has risen an average of 0.2 compared with 0.37 gain when rates are cut and 0.21 gain when rates are raised. So literally, the market goes up no matter what. That is the outcome. So literally, if you raise rates on average from the 1970s or whatever, you go up 0.21. If you hold it, you go 0.26. And if you cut, you go up 0.37. So not bad, I guess. Bloomberg intelligence strategist Ira Jersey says that markets will be keyed into any signaling from the Fed leading into the statement and press conference, and though he doesn't expect any revelation, the market could shift meaningfully, particularly into the end of 24. He knows options on SOFR futures are pricing for the Fed to remain on hold or cut rates well below 4% for all of 2024, widening the scope of the movement. Key thing here will likely be seen in both the statement and Powell's press conference is the willingness to keep a door open to future hikes. Many Fed officials aren't ready to say they're done hiking, pointing to persistent strength in inflation as something that may warrant more interest rate increases at a later moment. The period between the September 19th and 20th meeting and this one has brought some surprisingly strong readings on inflation and the economy more broadly. Here are some third quarter headline numbers. Third quarter GDP growth was a whopping 4.9 higher than forecast, and a historic figure for U.S. where growth tends to hover around 2 to 3%. So again, this is what I mean by context. September payrolls were also strong, with employees adding 336,000 jobs, nearly double what economists have been expecting, and then a variety of inflation indicators cooled less than anticipated and posted slight gains. The employment index, a broad reliable indicator, ticked up 1.1 in the third quarter, a pace far above the pre-pandemic range of 0.7. Sadly, they did not include a 50% run on oil since June. But that'd be one more thing I would add in there. So again, we got 5 minutes now until the release of this statement. Powell comes on 30 minutes after that, so keep that in mind. But we're getting close to the event. I've got you everything up to date, I think, for the most part. So again, I've given you analyst comments, I've given you my opinions, what I expected, and now you hear the analysts. I'm sure some things are matching up. You should be up to date though right now. Nothing's expected. Everybody's still kind of worried about the signaling, about it went down in last quarter. We're right at 4,200. I haven't been pretty much empty after the market gave us the investment. Everything fell back when the curve came up on pricing cuts for 2023 or early 2024. The whole entire futures contract all these things. So how will the match up the stop loss? The stop loss and all that really matters. Nothing to expect. That is day. It's only us to look at it day after too. Because the rest of the didn't know the number was going to be another box. It's still on the table. Since this one potential merger, I had a headline on one of those earlier this morning. Yeah, Peter Harris for potential merger with Six Flags. There's Six Flags. I don't know if that's true.
Little
on here, you gotta wait for that price conference here.
Down. What the fuck? God damn. $230? Jesus.
I bought 6 flags, I don't want it now. Starting to come back down though. Yeah, you can just push it, so a lot of people are pushing it. Alright, so if I got a buy, I'm ready for it. Again, analysts say the crucial sentence determining how much more policy effective inflation has not been altered, so no like that. 6 flags, either here, that's coming across the field. So the year rate, 12% pop, 5% what we got it. No one's really seen the outcome. So again, first take, this is what we expected. Getting a little bit of that obvious mix, but not to the point. No real statement made here. No real bit of Fed thinking that rates are high enough to slow down, but also, once again, discussing the strength of the economy, the job market, kind of yeah, very easy for now, but that press conference, not much, 4 minutes out. You know, first 5, watch every like 5 or 15 minutes at a time. We'll see where it takes us from here. But not too bad for now. Not too bad for now. Powell's attitude, though, they want something to let you know. And like I was saying before, all of it, don't underestimate that understand, like, he's aware of long-term rates, he's aware of what's going on. Back to the focus, like, watch whatever the market does. Like really, really dumb, but even then I think we have a quite a scenario here where that did change much and a little bit, but now we have to focus on how it's pressure. So deals can fall into the area, but they are like a relatively like the natural power time moderately up it's in the statement. Other times he puts in these things in that he don't touch on the presser, but he does say something related to that. But now a lot of a couple of markets want to go. So it's just a word really how more big for the last So last month, he didn't mention financial credit. So that's the only one word. Credit might refer to financial credit or market situation. The one of the market how like it's good. This is playing out how I thought for now. This is what people are saying, and that's the only thing. A lot of those questions are going to be about this. Financial credit wise, how people get responding to the market. While contracts are outstanding prices, so watch out for those things. I'm not bullish yet. No, I don't know what to do today. That's what I'm telling you. That's why I put it honed in on what people are looking for. Like I'm telling you, before any of this came out, I said financial conditions, sure enough, that's the thing that was added today, and you're going to get at least 2 or 3 questions about it now, considering if it didn't stand out. So we don't know. He says, like I told you, if he says something bad about it, we're going to have a really big problem. If he looks at it favorably, communicates that, then we're going to have a nice little rally. Snapchat, Meta, all these companies, they did not mention Israel a lot at all. Not one reference. That's crazy, actually. But they talked about it a little bit earlier, but considering everybody is ignoring that oil went from 60 to 90 ahead of this, I'm surprised that geopolitical risk is about to be. There's no change in people preferring to get run off of portfolio bonds. The Congress have been expecting essentially expecting rates to be on a big technical perspective. On the whole side of disruption, during the things that are going to happen in 2018. Last thing is basically they stated that this is a financial condition that supports the way I think I'm going to get to this paragraph. That's an audience reference. On by the business about long-term work and operations. The economy got the positive for financial assets as around the world provided by the ISM. So again, analysts are already predicting what I told you before. You hit it right on the head in financial. That's all the whole thing about happening. And everybody is fucking running out. The baseline outlook makes a lot of sense. Former Fed chair, former Fed at my risk, however, is the risk remains stubborn, but you're seeing the price of Powell, so it's more before I Oh, Six Flags, and another pot, nice. 12% on that one. They're already trying to skinny, like I said, financial conditions favorably and Powell communicates that, hey, financial conditions are tightening, that's why we're bringing it up, and that's why we're slowing down. The market's going to like that, so
Market's not gonna go up unless we cut. On his ass. Yeah.
I didn't know it was going to play out exactly like this, but trying to get it on the head, so down to what's actually head. Very short term until Powell opens up his mouth, people are liking that. There does seem to be a bias kind of response. Like I'm telling you, I told you this hours, I told you on the watch list, if we need to get analysts are saying, oh, this is great for market, because now it's worried about financial conditions. So we'll see what he says, but you get a general idea for now. But remember, he doesn't want to fail to that press conference. So until he opens up out, no call for anything.
Unemployment dropped as soon as
Here, especially if you got the watch list, you got go see in chat, just in case it's not a little relaxed day. There is a backup screen just in case someone comes first. Might as well leave that up now, leave it out, just in case there's a shut out. We haven't even started yet. Again, we got a little bit more on the way here. This is going to be the real action of all of it. Again, one slight change is happening so far. Still have non-bars, that's the crazy part. They're still going to follow all the this data and how I was exposed. I just don't know. That's the thing. Like right now, the analysts are like, yeah, I guess these bullets, but remember what I told you. What if the power was pissed off? How, in a weird way, I don't think I've seen this yet, but I do want to see how we talk about those things. The fact that it's easy to see CPR in the body, some people are trying to like, play a little bit over. Yeah! Yeah, clear science, that was up to me for everything right now. I don't think pop up during the press conference, labor agreement, on companies and workers, that means the conflict is over economic law-based orders, all the stuff that is why we have to peril. I pointed out that they were posted at that note, with advanced private type of letter, providing board members. Bloomberg's already saying Anna Wong has been very accurate and very ahead of the curve. She is from Bloomberg and she's saying now that she's saying it's bullish. Again, they're saying that statement is financial conditions is bullish. The second analyst, he holds a lot more weight. The second analyst in our RSA is what's it called? They have like numbers just because they talk about financial. I don't think anything has changed. I think the essence of it, what I've been telling you, is on how aware of it. You're like, I think that going back more. The last time we heard about it, I should have known one of that's the crazy part. Last time we brought up financial conditions, we were roughly around the same spot. We started reacting to it. So it's the fact you brought it up, and we think that he thought that the stock market getting bought, but it's also something that is trying to deal with before. So that's what I'm saying. You got to hear what he has to say about it. And now, this is the context where you can like the question they have. I told you about these words when anybody told me about it, right? I don't have that same interpretation. I am firmly holding the same account as I had prior to the note. I need to listen to how. I don't know how you can twist that question or how you can twist that issue. The way that Andrew starts saying it's bullish is because Powell will not raise rates again, and it means to respond to the market coming in. So that means that the market comes down and Powell brings that up. That means he's trying to compound in. So that's like an indication that, okay, this big tightening is working. So that's why by him talking about financial conditions again, people are trying to do that. I know you didn't say that, but I just want to make it clear. why I like it, but I'm just saying that they'll rather talk about the talk very well. You know what you have to about it, but you know, like I said, holding on this word, like, right? This guy is working for that. For the most part, everybody, Marky Barrett, on the Barrett, that's the bubble up. Don't get it twisted. You know, screw the equity on the
SPY gave me 50 and I didn't take it. Fuck. Idiot, dude.
Equities are around here. Have a group. I'm telling you right now, a lot of people, they're waiting. On this, these powers from forward.
Pay attention, dude. SPY is now got against 25. Horrible. Why are you still in the trade, dude? Why are you still in the fucking trade? Jesus Christ.
Yeah, I hope you all understand that. You know, watch the market move. Usually, right when he starts talking, it's pre-written, the market's going to go up. That's usually what happens every time. At least for a couple of days. Okay? Don't forget, not to forget. Now, I will tell you, the word financial conditions are coming. That's going to move the handle. I told you beforehand. So I'm still standing by that. Financial conditions, that word, is my point. How do you know this speech is going to end? Use it by saying, Fed has a goal. The estimates don't like quality. Like our goal is to maintain quality, to make sure, that's how you know it's not going to end. So that's the thing.
I'm down like 220. Yeah, dude, that's fucking entry, dude.
That what I told you is happening right now, that we're still sort of the passengers are telling us about why. Again, a lot of financial conditions. What if he actually does tell you there's not a idea? What if he tells you about financial conditions, the knowledge of says maybe a little bit more on the expense? right away. Now, again, as you start to know that auto algo coming, that algo that still at 0.54 on the SPY, NASDAQ to 8, and down to 1.5. How is it someone 45 days? And Dow Jones, NASDAQ, 14 spread. That's insane. Bro, they changed the news. Something happened, bro. This is so weird. They're not even playing it right before. I know that makes me weird to you. There you go. Okay, thank God. Oh, this is getting on. Alright, the Fed website should be ahead. But why do they still have to do this? I think there might be a couple seconds delay. Usually on the Fed website, you see it ahead of everything. So again, these signals are going here. I don't know where it's at. Alright, CNBC or no, Fed website usually has the fast food. Go to this link if you want my answer. I will chime in on, I'm going to chime in on all financial topics.
Given how far we have come, along with the uncertainty and risk we face, we will proceed carefully. We will continue to stand for the policy firm
Again,
and
no
no policy will remain restricted
so that bullish reaction from the statement is showing up right now. Continue.
More said monetary policy efforts briefly recent data suggests that economic activity has been expanding under strong
He's not wearing glasses.
in the third quarter, real GDP is estimated to have risen an outsized annual rate of 4.9%, boosted by a surge in consumer spending. After picking up somewhat over the summer, activity in the housing sector is flattening out and remains well below the level of a year ago, according to the high mortgage rates. Higher interest rates also appear to be one of business fixed investment. The labor market remains tight, but supply and demand conditions continue to come to better balance. Over the past 3 months, payroll jobs averaged 266,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.8%.
press conference for real movie. All the headlines now to return this rate to a conference.
As I noted earlier, since early last year, we have raised the policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided that today's
Here,
rate
long-term bonds are kind of showing weakness, but then they can respond to
by 9%.
call out on that.
We continue the process of significantly reducing our securities holdings. We are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we are confident that inflation is on a path to offset. We are attentive to recent data showing the resilience of economic growth and demand for labor. Evidence of growth persistently above potential, or that tightness in the labor market is no longer easy, could put further progress on inflation at risk and could warrant further tightening of monetary policy. Financial conditions have tightened significantly in recent months, driven by higher, longer-term bond yields and other factors. Because persistent changes in financial conditions can have implications for the path of monetary policy, we monitor financial developments closely. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the income data and their implications for the outlook and for economic activity and inflation, as well as the balance of risks. In determining the extent to which policy firming may be appropriate to return inflation to 2% over time, the committee will take into account cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial development. We remain committed to bringing inflation back down to our 2% goal, keeping longer-term inflation expectations well. Reducing inflation is
sound worried about
our period of below potential growth when someone asks why we're on this condition. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the long term. To conclude, we understand that our actions affect communities, families, and businesses.
The final.
Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment price stability.
Powell that's worried about financial conditions kind of seems like he's back.
Howard Schneider, lawyers. Thank you, Chair Powell, for doing this. So what you referenced to Ryan,
This is what matters.
to what degree that's the plan, actual plan.
Thanks for your question. So, I'll talk about findings, but I want to take a second and just sort of set the broader context in which we're looking at. So, if you look at the situation, let's look at the economy first. Inflation has been coming down, but it's still running well above our 2% target. The labor market has been rebalancing, but it's still very tight by many measures. GDP growth has been strong, although many forecasters are forecasting and have been forecasting that it can slow. As to the committee, we are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time, and we're not confident yet that we have achieved the right
Not confident.
So that is the broader context in which this.
Before answering the question, he's telling you he's not confident in whatever he's working on. Now he's like dealing with the bullshit so far.
Obviously, we're monitoring or attentive to the increase in long-term yields, which have contributed to a tightening of broader financial conditions since the summer. As I mentioned, persistent changes in broader financial conditions can have implications for the path of monetary policy. In this case, the tighter financial conditions we're seeing from higher long-term rates, but also from other sources like the stronger dollar and lower equity prices could matter for future rate decisions, as long as two conditions are satisfied. The first is that the tighter conditions would be persistent. And
So you say tighter conditions could affect it, but they're not tight enough? I don't know, man.
Things are fluctuating back and forth. That's not what we're looking for. With financial conditions, we're looking for persistent changes that are material. The second
Back to old Powell.
like the longer term rates that have moved up, they can't simply be a reflection of expected policy moves from us that we would manage, but if we didn't follow through on it, then the rates would come back down. So I would say on that, it does not appear that an expectation of higher near-term policy rates is causing an increase in the longer-term rates. So in the meantime, perhaps most important is that these higher treasury yields are showing through to higher borrowing costs for household businesses, and those higher costs are weighing out to the extent this study persists. The mind's eye goes to 8%, near 8% mortgage rate, which can have a pretty significant effect on housing. So that's how I would
Looking at our list now, the urban statement and just now, you see real budget, you are not yet confident that plan conditions are restricted or not.
I got one thing.
Yes, that's exactly right. You know, to say it a different way, we haven't made a decision about future meetings. We have not made a determination. We're not, I will say that we're not confident that shall be in good sense.
Again,
We're not
just
confident that we have it, we're not confident. And that's exactly the way we're going into these future meetings is to be, you know, just determining the extent of any additional further policy type thing that may be appropriate to address it.
Again, coming back to the bonds. So first question, kind of the answer to this wasn't as good as we thought for now, but just wait till he doesn't say anything favorable. That was question number one.
That's a fair question. I wonder, you know, if you don't raise interest rates in December, would the perception be that at that point that we should expect the rates at their peak, or is there a possibility of starting rate increases next year? And are there any costs to take a more extended pause?
So,
Dollars rocketing up now too. Again, bonds are the first mover down.
but
Equity's moving way more.
we're going into December meeting, we'll get, you know, 2 more inflation readings, 2 more labor market readings, some data on activity. And so we'll be taking in also the broader situation, the broader financial condition situation, or real situation. We want all the things to make a decision is that we have to make that decision. I would say though that
One thing on the whole,
the idea that it would be difficult to raise again after stopping for a minute, which is not right. The committee will always do what it thinks is
so
appropriate.
you felt you'll raise at any moment.
Whether they have made a decision about all of that.
Yeah, they just don't count it for the moment.
Decision.
We're going straight down on that.
No, the decision for this meeting, broad.
And he didn't give a gold star to fight it.
That's the journal. However, the Fed staff put a recession back in the baseline forecast in the materials for today's meeting. And how much does this tightening financial conditions substitute for rate hikes if the tightening is persistent? You had said it was worth maybe a quarter point when we had a debate of failures in the spring. What is your view on something that's presumably more straightforward and more familiar to simulate?
So I guess I got one answer about the recession, but the answer is no. I think I have the answer. Just be good publicly saying yes. You'll know anyway. It's definitely not the recession. Maybe it would be hard to see how you feel about that forecast. Look at the activity in the state recently. Like that, it's just not really indicative of a recession in the near term. In terms of how to think about translation into rate hikes, I think it's just too early to be doing that. And the main reason we just don't know the system. This would be, you can see how volatile it is, different kinds of news that affect the level of rates. I think any kind of an estimate that was precise would hang out there and have great things that look wrong very quickly. So I think what we can say is that financial conditions have clearly tightened, and you can see that in the rates that consumers and households and businesses are paying now. And over time, that will have an effect. We just don't know how persistent it's going to be, and it's tough to try to translate that. But
Yeah, but if you say you're not going to look at that financial institution, right?
What makes you confident higher financial conditions will slow lifetime growth from 500 basis points of rate hikes each year, and the minor rate increases have not thus far?
That's you know, the way our policy works
is sometimes it works with left, of course, it could be a long variable, but ultimately you raise interest rates, you do see if those effects, and you see those effects in the economy now, and you see what's happening in the housing market, you're seeing it now. You'll see, if you look at surveys, people, it's not a good time, they think, to buy durable goods. The market rates are so high now.
That is the bad side. That's what I'm getting here now.
But you're right, this is the resilient economy. And it's, I think, surprising on its resilience, and there are a number of possible reasons why that may be. Our job is to achieve maximum employment and price stability. So we take the economy as it comes. It has been resilient, so we take it as it is.
Colby Smith at the Financial Times. In terms of the threshold that you've laid out of what could warrant further tightening, the additional evidence, of course, seems to be above trend growth or some kind of reversal in the recent easing of labor market tightness. That seems to suggest something more powerful than just one more sort of rate hike would be necessary. And I'm just curious if that's how the computers seem there.
So we've identified those factors, and those are not just the only factors or a specific test that we're going to be applying with some metrics behind it. Really, we're going to be looking at the broader picture. What's happening with our progress towards the 2% inflation goal? Is the labor market continuing to broaden and cool off and achieve a better balance? And we're looking at that. Growth, we look at growth insofar as the implications for our two mandate goals. We look at that. And we look at broader financial conditions. So we're looking at all of those things as we reach a judgment, whether we need to further tighten policy. If we do reach that judgment, then we will further tighten policy.
In terms of the tightening of financial conditions, if that is having some kind of offsetting effect in terms of ability to actually then raise rates, what then is the potential impact on the trajectory of rate cuts? Do you see those maybe pull forward or have to see more than what the September estimate would do?
So the fact is, he's not thinking about rate cuts right now at all. We're not talking about rate cuts. We're still very focused on the first question, which is average length of stance of monetary policy, which is taking on 30 days for inflation and 2% over time. It's the same. That is the question that we're focused on. The next question, will be for how long will we look at the policy restricted. And what we said there is that we'll keep policy restricted until we're confident that inflation is on a sustainable path down. That'll be the next question. Honestly, right now we're really tightly focused on the first question. The question of rate cuts just doesn't come up because I think that it's so important to get that first question. It's close to ready to go.
Rate cuts.
Everybody but CNBC,
I go back against the
we'll
most.
assume that there was a tightening bias. If you say in the statement, we're looking to assess the appropriate stance of monetary policy. You said that you may cutting. You said earlier that it is sufficiently restricted to forecast for 2 rate hikes for most members of the committee. But then you just said that, we haven't made a determination. You say the bias right now is neutral, that there is no disposition to hike again, and that the committee going to off of this forecast for 2 hikes.
I wouldn't say that at all. I would say, the language, looking at it here, in determining the extent of policy firm,
Hammering home the rate rate.
that's the question.
No, not at all.
We haven't used that term, but it's fair to say that's the question we're asking. Should we have it's not, that is the question, and you're right,
They're still thinking about hiking.
but,
Now it's starting to turn a little hot. It was already getting bearish there, but now, like I said, that goes from fighting against the bull bias to now it's really again for the time. I don't believe in the hard work that's right here as far as oil prices have leveled off. And get on with it again, have the outbreak of war between Israel and Hamas. How do you see all those factors fit together affecting the economy going forward?
So there are significant issues out there. As you pointed out, geopolitical our job is to monitor those things for their economic implications. So the UAW strike, as you point out, is appears to be coming to an end. Well, first it's a flat cat, and then one down. But I think it's going down a little bit from the earlier people. Another one is the possibility of government shutdown. We don't know about that one. So there's plenty of risk out there. But I would go back to the bigger picture from our standpoint is they're a very strong economy, strong labor market, making progress on the labor market, making progress on inflation. And we're very focused on getting confident that we have a substantial monetary policy. That's right.
Just one quick thing too. Last month, you talked to Gordon Clayton, where you talked to a lot of, last month, where you talked to a lot of small business owners. Just curious, what sentiments did you hear from them, or what did you pick up on? Was there anything that surprised you in terms of what they talked about?
I wouldn't say I was terribly surprised. I was very impressed by your concern with a real strategy, and I would say it's very impressive what the people there have put together in the face of some difficult longer-run trends about offshoring or manufacturing, that kind of thing. They've done a great job as a city. What you hear is consistent. There's just people are really suffering under high inflation. You were there, we talked to some people who, were feeling that in their businesses, and other people who were feeling their home lives as well. It's painful, particularly people who don't have a lot of extra financial resources, who are spending most of their income on the essentials of life. So we know that wasn't new, but that did come through very clearly in the competition and working. I walked away from that meeting just thinking that we really, the best thing we can do for the U.S. is to restore price stability.
I don't think they're out of bullet. I think
fully restore price stability and not force do it as quickly as possible, but also with
the same power is taking the process of changing the words back to the words we freak out about it. It's harder to have. So again, I'm going to keep raising rates. I'm going to keep raising rates.
About
So I can use it to achieve that, but now the market still kind of responds.
not responded to rate hikes in ways that would normally be expected. How do you change your views on that at all? Like how necessary or inevitable that kind of thing would be, say, for the government or overall growth?
Well, I think everyone's been very gratified to see that we've been able to achieve, pretty significant progress on inflation without seeing the kind of increase in unemployment that has been very typical of rate hikes like this. So that's a historically unusual and very welcome.
Still kind of.
And
That's why
true growth. We can
That's
see
sort of hard to realize. We have to start to double down. That opportunity for it not to happen.
My colleagues,
Like I'm saying,
maybe for the most part, still believe that it is likely to be true. It is still likely to be true, not certain, but likely that we will need to see some slower growth and some softening of the labor market conditions to get through AAA restore prices. So, but it's only
being careful about saying the market stops believing it's going to go back to the
understood that there are really two processes at work here. One of which is the unwinding of the distortions to both supply and demand from the pandemic and the response to the pandemic. And the other is restrictive monetary policy, which is moderating demand and keeping the supply side time to recover, time and space to recover. So you see those two forces now working together to bring down inflation. But that's like first can bring down inflation without the need for higher unemployment or slower growth. It's just supply side improvements like shortages and borrowings and that kind of thing going on. It's getting a significant increase in the size of the labor market, both from the labor force participation and from immigration. That's a big supply side, gain that is really helping the economy. Part of why GDP is so high is because we're getting that supply. So we welcome that, but I think those things will run their course, and we're probably still going to be left. I think still be left with some ground to cover to get back your full price stability. And that's where monetary policy will, what we do, the demand is still be important.
That's what that's how you've got new clarity on how the economy is so resilient to high rate increases. Is that just to you there isn't necessarily a huge labor tightening that's still coming to the pipeline that it already?
You know, I continue to think it's very hard to say. So it's been 1 year at this meeting. 1 year ago, this was a 475 basis points hike. So that's a full year since then. I think we are seeing the effects of all the hiking we did last year, and this year we're seeing it. It's very hard to know exactly what that might be. But you could, for example, an example where you wouldn't have felt this yet is debt has been turned down. But it's going to come due and have to get rolled over next year and the year after. So there's little things like that where the effect is just taking time to get into the economy. So I think we have to make monetary policy under great uncertainty about how long it lasts on. I think trying to make a clear answer to say, I'm just going to assume this, is really not a good way to do it. And this is one of the reasons why we have slowed the process down this year, was to give monetary policy time to get into the economy. You know, it takes time to do that. You can't rush it. So slowing down is giving us a better sense of how much more we need to do if we need to do more.
Michael McKee from Bloomberg Television and Radio. Kind of point the dots here.
But again, I think the market might try to pull the towel out. I'll explain afterwards, but again, it's playing the same game that I always said before.
Period of lower trend growth.
Always pops on that shit.
Two, it sounds to me like you're basically saying here that the dot plot's out the window, that every view is live with the possibility of a rate increase for right now. It doesn't matter about the year. And that there's not an objective way to determine whether or not you've got enough tightening in the system. There's going to be a significant adjustment even by
So that's what
But it sounds like, great question.
That part is a picture in time of what the people on the committee thinks is likely to be an appropriate monetary policy in light of their own personal economic forecast. And first of all, when things change, that's not a plan that anybody agrees to or that they do. That's a forecast that would change, for example. There are many things could change that would cause people to say, I wouldn't write down that dot, 6 weeks later. Think of the number of things that could change your mind on that. So I think the efficacy of the dot plot probably decays over the 3-month period between that year and the next year. But nonetheless, it's out there. We do personally update our forecast, but we don't update the dot plot. So, I think we try to be transparent at the point that we're thinking of this, laying out our thinking, and, as we approach the meeting, my colleagues and I will be talking about how we're processing that data. In terms of food, we're not really changing the way, in terms of growth, what I said was below potential. So what you have here recently is growth that is temporarily, potential growth is elevated for a year or two right now over its trend level. So the right way to think about it is what potential growth is. People think trend growth over a long period of time is a little bit less than 2%, they're back 2%. But what we have is with the improvement in the size of the labor force that we mentioned, people participation and immigration, with the better functioning in the labor market, with the unwinding of the supply chain, shortages and those kinds of things, you're seeing actually elevated potential growth, catch-up growth in potential. And that means that if you're going to be growing at 2% this year and still be growing below the increase in the potential of the economy. I hope that's clear. That's really what's going on. That's why I would say below potential.
Essentially now, with a chance of a rate increase that will be decided on subjective criteria rather than objective at each meeting. Pretty much.
It's a
simple question.
I want to just accept anybody's characterization. I'll tell you how we're doing it. So,
Well, the objective is there. I say, the sky blue. Like, hold on.
inflation at 2% over time. That's the question. So we're looking at the full range of economic data, including financial conditions, all of those things that we're looking at. And we're come very far with this rate.
It is what he's saying, but this type of meeting, you're trying to get it out of it. I'll explain after. I think the market might try to put it on how.
Additional rates to close to the that was the impression.
He's talking about the financial condition, he brought it up,
It's not a problem.
but he's not changing it.
So we're going into
And he's not telling you the limit of what it is, so that he needs to sound hawkish, and I don't think he wants to be, and I think the market might pull that. That's what I'm telling you.
It's restricted. We see its effects. Victimization, people sensitive spending, and other channels. So that's okay.
We've been running more off of this weird, him trying to say stuff, we're like, do we believe that?
So now, liberal access, we might have run up in long-term yields in the last several weeks. Considerations
Shit.
There were adjustments higher, higher term things.
All right, new line.
Take less forward, which we do have more activity pressure on
He's not considering changing the basic account. Not something like that. Considering, and I know there may be explanations for why rates were going up.
Yeah, I don't think the market
less than the market is far. I would say that $3.3 trillion in reserves. It's not. I think it's hard to.
He wants to raise rates one more time, why the fuck is he talking about financial?
So that's not something.
Especially if he's saying, well, we don't know yet about those financial conditions, it doesn't make sense. I think he needs to sound hawkish, but
I wanted to ask
he doesn't want to be too crazy about it. The diet is
You've gotten a lot of pushback from people on different aspects of the proposal, and you yourself expressed some reservations.
like I'm telling you.
Could you accept finalizing that proposal without
Change is change, it's not discussing the financial conditions.
That proposal is out for comment. And
I'm saying, I think people are trying to call it.
we won't get those comments until with a well-intended sense of the deadline. And we'll take it seriously. We'll read it. I'll say what I do expect is that we will come to, we're a consensus-driven organization. We'll come to a package that has broad support.
And others define.
broad support, more
Once you
support?
have what we need.
We need broad support.
Bloomberg. So, in addition to persistence, when you look at long-term treasury yields, what else are you watching to evaluate how those tighter financial conditions are hitting the economy, and if you're realistic for further tightening? Also, do you think that those higher yields could affect
So what are we looking at? I'm looking at very wide range of information. In fact, as you'll know, different organizations publish different conditions indexes, which can have 7 or 8 variables, or even have 100 variables. So there's a very rich environment. We tend to look at a few of them, not going to do it, but there's a few of the common ones that people look at. And so they're looking at things like the level of the dollar, the level of energy prices, the level of rates, the credit spreads. Sometimes they're pulling in credit availability, things like that. So it isn't any one thing. We would never look at, for example, long-term treasury rates.
You're not even
in isolation.
you have no criteria.
We ignore them. We can look at them as part of the broader picture. And we do play a role, of course.
You brought up financial conditions today, but you're not terribly
Standard.
He's always denied it, but
Was
back a year ago.
thank you, sir. So it's something we're watching. As you know, we did have there were issues with interest rate risk and also funding uninsured deposits in March, during March and thereafter. So we've been working a lot with the institutions to make sure that they have good funding plans, that they were planned for how to deal with the kind of portfolio unrealized losses that they have. We do think the banking system is quite resilient. A handful of banks that are more strong and consistent, and one where there's a strong focus by banks and by supervisors on liquidity, on funding for social media.
Thank you, Chuck. That was it, Chuck. Last week, when the College put forward a proposal to lower the cap on credit cards, like for comment. Could you talk about considerations there when looking for mergers, banks, consumers? Also, think what no, it's skinny companies use credit cards.
So you're right. We put proposal out for comment a little bit, and this is a job that Congress assigned us, as you of course know, in Dodd-Frank. All we can really do is faithfully implement this statute. That's all we're trying to do. What else can we really do? It's a 90-day comment period. We typically don't comment on the once they're out there. Comment. And we do work with stakeholders, and we know that they will use this opportunity to express their shop. So that's critical. That's what I can say.
So the last 3 months, the deal this year is replacing the 4% or relative 3%. You said in past 2% remains the Federal Reserve target, but with no rate increase today, how long will it pay them with 3% or 3% plus overall?
It's probably going to come in lumps and be lumpy, but when they can talk about it, the core PCB came down by almost 60 basis points in the third quarter. So let's say at the point would be September SEP where the expectation was that inflation spiking on this next year on the 12-month trailing basis would be down to the 2, and the year after that further increases. So that's if you look historically, that's sort of consistent with the way inflation comes down. It does take some time, and as you get further and further from the time, it may actually take longer time. But the good news is we're making progress in our credit policy. But we feel like we're on a path to make more progress. And it's essentially what we get.
In the past, that doing too little on these things could take years to fix, but the cost of doing too much easily fixed. How robust is the debate about this pause on the doing too little side?
That's always the question we're asking ourselves. And we know that if we fail to absorb flexibility, the risk is that expectations of higher inflation get entrenched in the economy, and we know that that's really bad for people. Inflation will be more higher and more volatile. That's a prescription for misery. And so we're really convinced now that for the first year or so, our tightening cycle, the risk is all on the side of not doing enough. We've come far enough that the risks have gotten more two-sided, and identify that a lot of the cities, but it does feel like the risks are more two-sided now. And we're committed to getting inflation back and work harder over time, and we will.
Side of it, the economists. Quick follow-up question about bank stresses. You talked about how bank system is resilient. Of course, part of the resilience in the past year stemmed from the bank funding program that we launched in March. Given that bond prices have not recovered that realized loss of the profit, how likely is it that we might have to extend that program in March next year?
Good question. We haven't heard of
Bonds, 2 years moving around. The policy is similar. Look at the long end of the term. Survey showed a big jump in 1.5 range last month. 2.45 last year. You said that the survey was really decisive factor in one of the rate hike decisions. If it stays elevated next time around, how big will that be to accept?
We look at a range of things. If the U.S. has got blown out of proportion a little bit, it was actually a preliminary answer that got revised away. And so not preliminary. So we look at any of this. I mean, so really, we look across the broad array of surveys and also market-based estimates. And, when we do that really carefully, honestly, the ball for them, like, year after year, that public belief that inflation will come down, that's what we believe is critical in winning the battle.
Mr. Collins, Solid Karen. Thanks for taking my question. I wanted to talk about the utilities. You mentioned today that you're still doing one of the reasons today. And you recently said that curious if you could elaborate on that at all, and whether that means
So, first thing to say is that it's very important area in the way we think about monetary policy, but we can't identify it with any precision at real time, and we know that. So, you have to just take that. You have to take your estimate of the grain of salt. What we know now is, within a range of estimates of the neutral rate policy is restrictive. And it's therefore putting downward pressure on economic activity and higher inflation. So we do talk about this. There's not any debate or attempt to sort of agree as a group on whether our story can move or not. Some people think it has, some people haven't said they don't think it has. Ultimately, it's unknowable, and so really, again, what we're focused on is looking at the data, giving ourselves a little more time now to look carefully at the data, but being careful in our moves. Does it feel like monetary policy is restrictive enough to bring inflation down to 2% over time? That's the question we're asking ourselves. I think years from now, Congress will be revising their estimates of R-star as it existed on November 1, 2023. We can't really wait for that to be in policy. We have to have those models and look at them and implement them, and ultimately we've got to look at the effects of the policies having, accounting for the lags, which makes it different.
let's follow up on a Lisa's point earlier. You talked about the inflation network, but I'm curious if you have any concerns about with inflation at its current level could risk pushing up overall inflation or really others.
But if you look at the broad range of wages, they have the wage increases have really come down significantly over the course of the last 18 months to a level where they're substantially closer to that level that would be consistent with 2% inflation over time, making standard assumptions about productivity over time. So it's much closer than it was. And that's true of the ECI, which is a performance. One of we got this week. It's true of average hourly earnings and compensation per hour too. So in all of our percent, which is great. You have to look at a group of them because any one of them can be idiosyncratic with any given reading. So that's what you see. And so what you saw with the ECI reading was you look back a couple of quarters and see it was much higher and it came down substantially in June. And then September reading was more or less at the same level as the June reading. So in a way, it's just validating that decline. And it was very close to our expectations in terms of too. So I think we feel good about that. So I would say it isn't, in my thinking, it's not the case that wages have been the principal driver of inflation so far. Although I think it's fair to say that as we go forward, as monetary policy becomes more important relative to the supply side as we talked about unwinding the momentum effects, it may be that the labor market becomes more important at the time too.
Hi, Nancy Marshall, the marketplace. Chip, are you now as concerned about overshooting and raising interest rates as you are about getting inflation down?
So, as I mentioned, I think for much of the last year and a half, the concern was not doing enough. It was not getting rates high enough in time to avoid having inflation expectations, higher inflation expectations, economic trends. So that was the concern. I think we've reached it, now more than 18 months into this. You can see by the fact that we have slowed down, although we're still trying to maintain confidence in what the corporate stance is. But you can see that we think, and I think, that the risks are getting more balanced. I'm just saying that they're getting more balanced. The risk of doing too much versus the risk of doing too little are getting more closer to that. Because policy is clearly restricted at 5.25% to 5.5%. That range, if you take off the mainstream estimate of the expected inflation, the blended inflation, you're going to see that it's a real policy rate that is, well above mainstream estimates of a neutral policy rate. Now that's arithmetic. Doesn't really. What the proof is really not against, but I would say that we're in a place where those risks are getting closer to being balanced. Well, I think what we're looking at is, are we still, is inflation still broadly cooled? So is it sort of validated the path we saw over the summer, where inflation was clearly cooled and coming down? Now we've seen periods like that before, and that hasn't been followed through the data back. So what are we seeing? We've seen inflation still coming down. That's the first thing. Second thing is, in the labor market, what we've seen is a very positive rebalancing of supply and demand, partly through just much more supply coming online. And with labor demand still clearly very strong, the kind of job growth we've had over the last quarter, it's still very strong demand. So you see wage increases coming down, as we discussed, they're coming down, in a kind of gradual way. I think that's what we want to see that way instead of maybe structural change in either consumption or the job market effects, pushing up consumption. I noticed you saw in the third quarter, GDP figures which were strong, and some economists expected rich spending to fizzle out by now. I'm kind of wondering if there's any structural change in consumption. I wouldn't say there's a structural change in consumption. I would say it's certainly been strong. And so a couple of things. We may have underestimated the balance sheet strength of households and small businesses. That may be part of it. There may be, we've been, like everyone else, trying to estimate the amount of savings that households have from the pandemic. They couldn't spend on services really at all, even person services. And, there could still be more of that than we think. Although at a certain point, we're going to get back to pre-pandemic savings. We may not be there. So things that, for clearly people are still spending. The dynamic has been really strong job creation with now wages that are higher than inflation in the aggregate anyway. And that raises real disposable income. And that raises spending, which tends to drive more hiring. So you have to really, that whole dynamic is changing. And also at the same time, the pandemic effects are wearing off so that goods availability, automobile availability is better, or was better, it still is. And from a business standpoint, more people to hire, and there's more labor to do. So the whole thing is led to more spending. And it's been, it's been good. And the thing is, we've been achieving progress on inflation. So it's been a dynamic. The question is, how long can that continue? I just think the existence of this second set of factors at this time is the unwinding of the pandemic effects. That's what makes this cycle unique, I think. We're still learning. That's a longer process to begin than we thought, and we're still learning about how it plays out. That's all we do.
You need to go to like 12:45. The question following up on the earlier one, because the Israel Hamas conflict, the financial security report said Israel Hamas conflict, the conflict in Ukraine, poses important risks to global stability, including the possibility to sustain disruption, region trade, food,
Federation had a conference titled the World Bank on possible surge in prices if war spills over the community. I'm just wondering how the Federation got these communities in which they are, and just what potentially economic impact could be if the conflict does spread to the community.
I wouldn't want to speculate too much, but I'll just say so. Really the question here is, does the war spread more widely, and does it start to do things unexpected in particular? This is the Middle East we're talking about. The price of oil has really not reacted very much so far. As the Fed, as the Federal Open Market, our job is really to talk about it, to understand the economic effects. It isn't clear at this point that the conflict in the Middle East is going to is on track to have political and economic effects. That doesn't mean it isn't incredibly important. It's something for people to interesting to it's really important to notice that, but it may or may not turn out to be something that the Federal Open Market community is going to talk about. But what the administration report does is call out risks, and that's what it's doing, is calling out risks. I mean, more in Ukraine, people in Ukraine that didn't have the news that they're
May or may not do anything that affects the Fed.
So, thanks very much.
Very interesting. All right, Chad. So I don't know. I might shock a couple of you right now. One, the beginning of his speech, where everybody, when he started running up, like right when he came out, then there wasn't there. The beginning was mostly bullish. So this is a chart here, amount of hawkish or bearish statements. Once again, for the 5th straight meeting, it was bullish. But now here's the deal. This is what I kept saying over again. Up, like right around here, I was like, okay, it started to sound very bearish in my mind. And it's funny because literally at the same moment, Nicky T, he tweeted, Nick Timirath, the Fed Whisperer, he tweeted how in his ear, it sounds like Powell isn't really trying to do another rate hike. And this is what I've been saying. My whole interpretation of all of this, I think it was borderline neutral. It did lean a little bit more when he kept talking financial conditions. The way he was pretty much acknowledging that, yeah, the financial conditions and rates aren't even tight enough to solidify that type of, lack of rate hike. That's where it started to get pretty bearish. But here's the deal. The way I'm looking at it right now, I really think we started going up because I think the market may call Powell's bluff. Once again, a year ago, he brought up financial conditions, and that's where we would get the volatility. That's where we would get the back and forth of nobody, believing. Yeah, you may have heard, I heard it too, but at the same time, like, if you also catch the very obvious effort to sound hawkish, but then again, this whole pop here, it was all analysts. I'm seeing people, everybody's looking at it, and they're just like, well, they don't believe it. That's the attitude I got. The second half was, yeah, he was saying a lot of words. He was pretty much saying how longer term rates, yeah, you can do this and you can do that, but there's no real objective measure to say that it's the end. People are trying to front run calling his bluff. Yes, exactly. But this time it may work because I don't know if Powell necessarily wanted to sound hawkish, or can he be hawkish? That's the ironic part about it. That's why when you are, I think it's just front running and people trying to put Powell a little more pressure. So I don't know if you like it or not. Like I'm saying, I don't know if any of you got it. The market started moving up, but right around here, I was like, okay, Powell's not answering the question about financial conditions. Again, he brought this up out of nowhere. He started bringing it up like last year. Everybody was really, really focused on it, but he's not telling you there's a rate, even the level now. He's not telling you anything. It was just like with jobs and all of those other things. So at this point, I think a lot of people are starting to say, yeah. Saying he was fake hawkish. Exactly. That's a great way to put it. And I think the market just started buying it up as they started to realize he was fake hawkish. You know what I'm saying? Yeah, he may have planted a seed, but it's fake hawkish to the point if something did. If inflation returns, he could be hawkish again. But then if something crashes or gets worse, I don't think he's in a position now where, again, that's why, like, they could say, well, whenever he's live, he's like, well, he wouldn't answer that, but at the same time, he would not tell you that he was done. And borderline, this is the same Powell you have seen
The only difference is financial conditions, and that's why I'm saying, with now bringing up financial conditions, but not giving you any insight to it, and then everybody buying the shit out of it so far. It's not even that big, but it could be, depending on where we move. Again, we're already past certain levels, but I think it was big coffee. It was coffee. It's the better way. Can we make a new word here at the chat? I think it was coffee. It was fake. It was a coffee. A false coffee. That's what to put it. Again, because I think you can pivot to it, but I also, again, the way you think you've seen all these people, even right before immediately, everybody was just saying, oh yeah. Because again, I was there to believe it. I'm down if he really gave you an answer to that, but in a weird way though, I think he's still part of leaving the door open. Kind of exposed Powell a little bit, if that makes sense. We'll see. We have to see his follow-up, and then remember, there's a non-farm report, but like, what I'm saying, I mean, here's the deal. We've seen this many times before, but when it's all said and done, like, whatever you're seeing on the market right now, I mean, bonds ain't really feeling it too. So that's the thing, is that if the bond market's trying to agree, I think they want to try to test it as well too, but at the same time, it's not like you're getting, this is on TLT. IEF though, that did make a sizable move. The 10-year is giving a response, but like I'm telling you, we have to make progress out of like the recent ranges. So the 10-year is, and that's where, you know, again, factor that into the keys, that's going to be a real driver. But you're back to 4.7, man. So we fall below 4.75. This gets actually really bullish here for the bonds again, or at least calming down wise, because that's what happened last time. Once we broke through 4.7, we're able to find our way back to a 4.5 in a calmer range. So very interesting. And again, bonds are telling you a little bit about the future, but yeah, I hope that helps. It was hawkish. Again, there was dumb comments in the beginning. They added financial conditions, and that could have been the thing that he did not want to talk about it. And at the same time, kind of avoiding that question, I think it kind of just highlighted it. You know, he could have there. I don't think he doesn't want the front runners, and that's why I'm like, all right, let's see. After this, I think it's people trying to call the bluff, but I don't know if it's I don't know the next follow-up with Powell, but we have Apple earnings and non-farm. Today we have PayPal, Roku, Qualcomm, SMCI, Airbnb, Etsy, SEBG, Elf, Melly, ALB, MRO, ACLS, MSTR, Run, Gas, Card, First Solar, Cuervo, MCK, CLX, SRPC. I thought we already had some of these stuff. I think SRPC and a couple of those already reported. And then AEL, AFL, AIT, EA Sports, the hub. Yeah, but Powell was different though. Again, in a weird way, I think Powell was the same, but the reaction this time around was a little bit, like I'm saying, he brought up new elements. It was kind of like he's trying to work away from the same speech. Because that's what I'm saying. He changed the wording a little bit. The same thing, brought a new concept, but did not elaborate on any objective measure or checkpoint to reach, while at the same time saying, oh, I'll raise rates tomorrow. Very, very Powell. Maybe old Powell comes back, but
very tricky, dude. His financial crisis is crazy.
I wonder if he's calling the publicity or not. Will actually follow through with it. That's where I'm at this point.
I don't fucking know. I don't fucking
I
know.
would say no, that's what it sounds like. Kind of what it sounds like. Can't say I'll raise rates. Like, I'll raise. Anything shows that we're going to raise. Or is it a live meeting? He didn't, that's the thing though. I think that's where Nikki Team didn't think why some people heard bullish, because he didn't want to tell you every meeting was live. He didn't want to scare the shit out of you. I don't think he could afford it, but at the same time, he wouldn't say it's a live meeting, but he also, at the same time, wasn't saying that, yeah, they're done, and, like, yo, keep going. But that's why he even made it. There was another question. He said, there's no
weird precedent about stopping and starting again. He just doesn't want to cut. SCU, what's this? This thing jumping right now? Whoa. Sculptor cap, I don't know, this might be a stack. Well, you got a couple more solar earnings, but I don't know. If the company is solar and didn't have good earnings, until the market really rebounds, I don't think they will rebound either. Because again, the ones in solar who did good, like Junko or First Solar, I believe, they killed it. They ran 15, 20, 30% on some of those. The market didn't blow up then, but I mean, at face value, I think we could have went down, but at the same time, there might be a period for everybody to again to say, well, I don't think Powell is going to, and I believe Powell is going to raise rates. Again, that's very dangerous to believe this year, but again, it was a fake hawk. So again, he said it what he was saying was very hawkish. That's what I'm trying to tell you. Again, the beginning words were not hawkish at all. He brought up financial conditions, but literally, like, after the first 3 questions, all about financial conditions, it started to sound very hawkish. It sounded as if Powell was setting up a window to say, hey, if financial conditions tighten, we'll stop, but even then, he wasn't confident in what he's seen so far. That was the message he was sending, that there was no certainty with what's happened already, and honestly, there's not even a level you can look for that will even stop it. If that makes any sense. So that's where it started to sound really hawkish, but in a way of sounding hawkish, I do think the market kind of called his bluff, because why would you bring up financial conditions? Why would you not say these meetings are live if you're not ready to change something? So I think everybody heard the hawkishness, but I think people are buying it in response to trying to call his bluff, and now Powell may not be the same Powell where he can just as easily raise rates anymore. Because once again, he's paused for 2 months in a row, and you heard what he said about his financial conditions or the data. I mean, you don't really have a range to even know. But like I'm saying, I mean, the bonds aren't fully believing it. The 10-year is. 30-year staying kind of limited there, and that can't get above it. But the 10-year is falling below the level we want. Like I was telling you, as a result, if the 10-year falls below those previous peaks, we're going to like where this goes from here. If not, if it moves a higher range, then we got a problem. I don't think he's in the corner, but it depends what the market does. You know what I'm saying? Because what happens if the market just buys the shit out of this before the next time you're in Powell, Apple earnings is good, rates come down, and we forget about everything, then Powell's going to have to, he'll get put in the test, or vice versa. In a weird way, I think Powell doesn't want equities to decline, but he doesn't want the bonds to rally. That's what it is. Now think about everything you just heard him say and what I just told you right there. He doesn't want stocks to go down. He doesn't want them to go up too much, because then, inflation can get back, but he still has wiggle room. But at the same time, it's not even like he doesn't want the bonds to catch a beat. That's all. 2 years, 5 years, 10 years, he does not want the bonds. Yes, he wants rates to stay high. He doesn't want the market to crater like it has with this velocity that parallels to literally March 2020. He doesn't want that, but he also doesn't want it to rally up. But that's what I'm saying. That being said, if I could pick up on that, and anybody with a couple $100 million could pick up on that, they may be trying to call his bluff now. It's a very awkward scenario for him, but that's why the only way he gets his, if you really rally off this, you're going to have to wait till he comes back and backs it down again. If he really disapproves, or then again, the data will do it for you. Don't forget, you have jobs data here on Friday, in 2 days. So, very interesting scenario, but that's what, it was subtle, but it was different. It wasn't the same bullshit Powell though. It was, if that makes sense, but this was kind of a different meeting than the last couple ones we've had of waiting for pause. Because like I'm telling you now, he's paused again. That's 2 pauses in a row, and that's why I'm saying he sounds hawkish. He sounds like a fake hawk, because it gets harder to go back to being a hawk after you stop the whole train. But then again, he made it clear, he was like, I will start the train up again, but from a historical context, that's difficult. But then again, anytime the market has doubted Powell, He fucking paid for it, and Powell was correct, except for transport. I mean, maybe it was, depending on how you want to look at it or who you want. But hopefully that. We got 25 minutes left. Hawks and Powell. Again, Vaughn's, I like. That was another broader factors in response, but like I just showed you right here, we're below that peak now. So we could get even below 4.7 and get back to those 4.5s, bro. I mean, that's half a basis point of difference. Even then, a quarter from just where we were at a couple weeks ago. That's both tightening and loosening conditions all in one. So that's why I'm saying how Powell is very interesting. But he was aware of the conditions tightening. He just didn't want to tell you what they meant. He wanted you to know it was still another one, but also that everything is live. But they've already stopped, but you can get on the start again. Apple was we have Airbnb, PayPal, and several others here after the bell. I could get you guys earnings previews if you like. But if you are going to stick around here for earnings, something you want, over the month. We already went to PayPal and Airbnb in the morning. Like a turn-based game, like Hockey Award in 2006. So Powell just had his turn. He came out with fake talk. It was not effective. It kind of was. I mean, watch the January on the Fed future, but we have to see how high or how fast this rally that actually holds up. Maybe that's where we should start. It has to actually hold up. Same goes for the bond. But at the same time, it's like, you don't have enough to speak with Powell, and then you also have data that speaks for Powell. If that non-farm comes in super hot again, I mean, there you go. After the bell today, we got PayPal, Roku, Qualcomm, SMCI, SolarEdge, Airbnb, XC, Mercado Libre, Albemarle, and Elf. All of these are kind of big names. They're like in the middle of like gigantic and small. But, most of these names are kind of household names. So we went over PayPal. Nowadays, which one? You want Roku earnings? If you want Qualcomm, never mind. Now it's 30 people. Okay, let me try Qualcomm like Qualcomm like 30 people per Roku. Qualcomm. If you want Roku than Qualcomm, it's Fox. Alright, well, let's start with Roku then. We'll go in, because I was going to do Qualcomm anyway. You sicko. We already went over PayPal. I can cover it again, but it's not the same. You can have it. You probably woke up late today. Yeah, I'm not trying to make money, I'm trying to have some money. So we'll go over PayPal once again, but anytime, maybe you just can't know the way to go to bed when you wake up, try to find out the schedule. What? I don't understand. I saw an opportunity like fire. Why do you have it? I'm going to go to PayPal. I love PayPal. I can't believe working on disgusting ads. That's crazy. So many ads. It's crazy. Exactly why. Are you kidding me? It's like if I was like, it was Survivor and like I had to pick a team and like Roku or Qualcomm, like I was thinking Roku. You know what I'm saying? I'm like, oh man, that's like playing NBA 2K and get matched up with 2. I'm not hating, I'm not shocked. That one's good. Alright, here's for Young Roku. So analysts, again, this could be out of date. I haven't double checked, so that's the thing. These are analyst updates, but just lately the market moves around a lot. Analysts like to change their opinions and shit. So this may be out of date or a little bit inaccurate. It just all depends on if there's any recent changes in the last 7 to 8 days.
Check this out. 387 lost today. God damn.
So, revenue is expected at 857. The company guided 830 to 875 million. Gross margin expected to come in at 43.1, 51.1 on the platform, and a loss of 14 on the player. EBITDA a loss of negative $29 million versus guidance of negative 40 million to negative 20. EBITDA margin loss of 3.4. EPS loss of $1.96. Active accounts 75.3 million. Streaming hours 26.2 billion. Average revenue per user 40.3. Okay, Roku. That's great. That's great average revenue per user. That's crazy. They got negative margins. Q4 revenue expected. This is for their guidance. Revenue is expected to come in at 953. Gross margin of 42%. EBITDA loss of 51 million. EBITDA margin loss of 5.4. Active accounts 78.35. Streaming hours 28.17 billion. ARPU average revenue 39.67, and then an EPS loss of $1.22 a share. Since last quarter of July, they have lost 17%. S&P down 9.4. XLY down 12. Near-term options imply a 14.3% move. Last 4 quarters, gain of 31, gain of 1, gain of 11, and loss of 4. Revenue has beaten 17 of the last 20 quarters. EPS has beaten 17 of the last 20 quarters with 2 in line. Forward quarter revenue has beaten consensus 11 of the last 17. Roku, no, they feel like they should be up way more. That's crazy. I would have wanted to put if they were still up here. Dude, their last earnings, they murdered it, but they've already given it back. So you're just back to the whole 11% earnings. That 30% outlier, they gave that up quick. Yeah, Qualcomm, low key though, you're right. Qualcomm sucks as an earnings play unless it's surprising. That's the thing. That's why Qualcomm is a great surpriser, but like I would say 8 out of 10 earnings, nothing's gonna happen. It's all gonna move in line. But that's the thing. When Qualcomm comes out, if they come out with a home run, that shit'll be up 17, 20%, and then that's a 2,000% of it. But usually, if it's not, it's a kind of small leader, a little weird way. Higher Condor, but like I said, if they come out with a blowout beat, you're gonna watch it. You'll have to pay because those options don't price in a lot. Somebody's got an hour. I've already been ready. Qualcomm revenue expected tomorrow or today to be 8.51 billion versus guidance of 8.1 and 8.9. Gross margin of 5.9%. Operating margin of 30.2. EPS $1.91 versus guidance of $1.82.
Is the stock market going to crash in the coming months? Is the stock market going to crash in the coming months? Will the stock market crash in the coming months? Will the stock market crash in the coming Will the stock market crash in the coming months? According to the data, not really. According to the data, not really.